Good morning, traders, and welcome back to another episode of Market in the Morning. We have a great episode ahead of you. We're going to be covering some of the updates that we just brought to you guys over in the Market AI terminal. We're going to cover initial jobless claims, comes out at 8:30 today, and we're bringing on the one and only Jeev, one of the co-founders of Market AI, and one of the best gold traders out there. So make sure you smash that like button, and I hope you're ready to make some money because Market in the Morning starts right now. Hey, hello, everybody. Good morning. Drop a good morning, drop a hello in the chat. I hope you guys are prepared for a great trading day. And of course, don't forget to like and subscribe. We do this now Monday through Friday for you guys from 8:20 to 10:30, giving you guys that brief in the morning before markets open and then cover the New York session as well. So I hope you guys enjoy. Let's go over some of the headlines that came out last night. Jeev is going to be joining us very shortly. What's going on, Authentic? Good morning. Welcome. Good morning, everybody. Look at that, man. We got a full team here. Who's ready to make some money today? Drop a like if you are. All right, so guys, the first headline we see when we open our Market AI, what's really prompting the market? And we're talking about the ES right now. Nalab, good morning. I think you're on the wrong side again. Ceasefire relief offsets Bank of Japan tightening, labor data, and AI loom. AI has really been one of the main catalysts supporting this massive bull run that we've seen over the past couple of years now. But what's really been pushing us higher since the end of March has been the reversal, the ceasefire. Good morning, guys. Eric, what's going on, everybody? So first, I wanted to cover some updates that we brought to the Market AI terminal. Yes, sir. So we have our Flip Watch should now be accessible for everybody who uses Market. So what the Flip Watch does, guys, is it's fantastic. One of the best updates I've seen in a while on Market. Meanwhile, we drop great updates almost every week. So the day trading bias on ES is slightly bullish, right? So now we could go over what's supporting this bias, and we should be doing this every morning to give us some insight into, do we really have a proper and strong fundamental bias supporting our long positions, or do we have a bias coming out that could flip us? And that's where we came up with the Flip Watch tool. So what's supporting the ES is going to be Middle East ceasefire reduces global risk premium and supports equities. Improving U.S.-Iran negotiations lower tail risk of wider regional conflict. Robust AI CapEx cycle underpins earnings growth for mega cap tech. Now, we've covered this a few times, guys. Now, what this is talking about, the whole robust AI cycle underpins earnings growth for mega cap tech, it's referring to all of the money that big tech companies, things like Amazon, Microsoft, Meta, Google, are paying for AI, right? That's called CapEx, their capital expenditure on AI. Now, these companies, just the 5 main companies, not including Apple, Apple is one of the very few that does not have a high CapEx, is estimating almost $700 billion in this year alone. All of those, just 5 companies combined. So some people read that as, wow, that's horrible. They have all of this extra spending. And at first, when they were announcing it on their earnings calls, people were seeing it as a bad sign. If all these companies have to spend more, what's my return on investment with these companies? How much are they really going to spend versus how much are they making from an investor standpoint? It shook some people out, but then markets just ripped higher off of the confidence and the forward guidance NVIDIA gave from its earnings, saying, hey, no, this is a good thing. High CapEx means we're going to have consistent revenue. So guys, let's get our hands together for a round of applause. We have the one and only Jeev joining us now. Jeev, good morning, man. How are you?
What's going on, man? Sorry about being late, bro. We had headlines coming out right into New York Open there regarding the Iran war. So, you know, I'm a trader first. I have to jump in. Have to jump in with those updates and get everybody locked in.
Absolutely, man. Always. What? Yeah, you want to share your screen? Go over some of those headlines for us here.
Sure. So overall, for you guys, over the last daily period, we have been seeing damage control and attempts at de-escalation to minimize the impact of what we've been seeing with the war escalating. We've seen a potential ceasefire between Hezbollah, Lebanon, aka Lebanon, and Israel. But even with the desperate damage control tactics we've seen from Trump, for example, this morning, you guys can see the headlines here that Israel was potentially withdrawing from a Lebanese town, and Trump was talking about the final steps of a deal being reached soon, right? Now, we have to understand that if Trump was to announce a deal with understanding his psychology, the ego of an empire, he would announce that deal right at New York Stock Exchange open, because he's been gloating and bragging that when the Iran war is done, oil prices will crash and stocks will continue bullish. So he would be the first one to announce a great deal, take credit for it, take ownership for it, and make a true social post about it, start bragging about oil coming down and stocks still remaining so bullish. Now, the fact that he gave some signals that a deal may be reached soon is a repetitive statement that is used for damage control. Remember, it is in government's best interest to try to keep oil prices down. But you could have events running in parallel where if you have this dual blockade persisting, the Iran war continuing, oil prices will remain elevated as you do not have any demand destruction. If anything, going into the summer months, demand is going to be higher in the hotter season, and you still have the ongoing supply disruptions too, right? So I think that what we're seeing is price setups for potential escalations into the weekend. What do we have really going on when we clear the smoke and mirrors, when we clear the noise? Well, for me, I've been focusing on oil, gold, and US dollar pairs. Iran war has been the primary driver there, whether you like it or not. There's a reason gold's been bearish since 5,000. Oil is not at pre-war prices, still elevated above $85 a barrel, and why dollar's been more bullish. It's because the supply disruptions on critical commodities, increasing inflation, pushing back rate cut bets is keeping those fundamental drivers in play for those gold bears, oil bulls, and of course, for those dollar bulls as well. Now, we don't have any negotiations on the original objective of Israel and US, which is Iran's enriched uranium. We have had Iran specifically state that uranium is no longer part of their discussion. We've had lies from Trump that the dual blockade is going to be removed and the Strait of Hormuz is fully open and ready to sail. That was denied. What is a critical change through the timeline of this war is that Iran now views himself as an authority in the Strait of Hormuz. This is a big change. I could care less who wins this war, who loses war. I don't give two shits. I'm a day trader. As soon as the war is over, the resolution's there, I'm going to be the first to sell oil back down, buy gold back up, but it's not that time yet. You have to understand that Iran seeing themselves as an authority figure in the Strait of Hormuz, using that as leverage, is a major change on the global supply chain. You're going from a waterway with 30% of economic activity flowing through there, being a free trade route, being a route with no dangers at all, no tolls, no tariffs, no environmental fees, no vessels needing to be guided through, to now potentially having an authority figure there where that authority figure can potentially play bias. If you're an Iranian ally, you get free reign in the Strait of Hormuz. But if you are one of my enemies, now you got to pay triple the fee. Now we might delay your route. We might even interfere your route. We might cause you more problems. That in itself is a big change where no solutions have been provided to any of these yet. So for example, looking at gold here, you can see that we've had some factors come out that could potentially flip the bias. We've had a potential ceasefire progress. We've had potential of the war coming to an end and Trump talking about deals, but nothing has actually changed the core problems here. You still have had fresh Iranian attacks on Kuwait. You still have disruptions to Gulf oil flows and energy markets. You still have feds repricing. I don't know if you can see. Let me share my whole screen here. One sec.
Yeah.
Because I don't think the drawing tool is working. So let me just share that there. I got it.
Sure.
See that?
Let's see. Good. There we go. Yep. Drawing.
Okay, perfect. So we still have more bearish factors for gold fundamentally that's maintaining structure. Fresh Iranian attacks on Kuwait and regional tensions, tit for tat, going back and forth, flexing their guns. We still have disruptions to Gulf oil flows and energy markets. We still have Feds repricing to more of a hawkish sentiment, which has kept yields higher, dollar more bullish. We've had labor market data resilient. Job openings data was higher. JOLTS job openings was much higher. Jobless claims is still in neutral territory. Even ADP private sector was still healthy. We've seen inflation figures from manufacturing prices paid, services prices paid, PPI surging. All of this has not had any solution to the core problem yet, and it's only going to get worse. A lot of people don't understand that even if there's not escalations every single day, new war conflict, having a stalemate of a dual blockade in the Strait of Hormuz is still compounding damage for an amplified fallout of the ongoing energy crisis, where Hormuz has been closed for 90 days now. This is the reason oil's still above pre-war prices. Oil's not designed to trend. Oil is designed to be maintained at an equilibrium with how important it is to global business, both for the consumers of oil and for the producers of oil. So when oil's elevated above pre-war prices, that is a significant tell of what's really going on fundamentally. And gold is not going to act as a safe haven from such record high pricing with rising yields, dollar being bullish, and rate cut bets getting repriced or pushed back down. So the energy crisis is still holding the most weight for gold, US dollar and dollar pairs, and oil. So looking at gold here, you can see the day trading time frame given ahead of time is still bearish. We've had a pullback from the target level and around these previous lows here, but so far that pullback level is holding this supply zone in resistance, and I'm still keeping an eye on a zone of interest myself around 45.70s to 45.80s as well. Now, we're already seeing that the potential ceasefire is already violated and fragile. We're seeing that no deal has actually been confirmed yet. This shows me a repetitive playbook of having damage control, short-term pullbacks, no actual confirmed resolution, and those pullbacks get faded. For me, I don't care if that pullback gets faded 10 times longer than the impulsive move was. I don't care if the pullback takes 10 hours to come back down. I still am sticking to that structure and playbook. So when we're looking at gold here, with rising inflation, labor market resilient, hawkish Feds, energy crisis in main focus, and no change in sentiment, if through the commodities exchange open, even going into the cash open later on, we create a bit of a double top, multiple lower time frame rejections here, and still hold below 45.10 to 45.15, even if it's not as fast as the upside move, slowly but surely through the majority of this daily candle, even into the next Asian session, we could fade this move and come back down. Friday, we also have NFP coming up. Now, NFP, in my opinion, is still going to be relatively neutral. Nothing crazy optimistic, but I don't think it's going to be anything recession risk worthy yet. I don't think that impact's been hit on the labor market yet, right? Now, with the potential of countries like Britain, potential of countries like UK, Germany, France, sending a defense mission in the Strait of Hormuz, with the ceasefire being fragile, Israel still occupying Lebanon, potential for more warfare to escalate, a ground invasion that could still take place, no signs of resolution. I think gold can still hold this area, even retest next week, and continue back down to these lows of around the 43.80s. Even as we're looking at headlines coming in, as I was speaking about it, you can see here, Britain, France are supposed to have a post-war mine clearing mission in Hormuz. So it's very interesting that you have these other countries getting involved and potentially sending a defense mission in there, which is really just to combat Iran, right? So I'm for sure going to be keeping an eye. The level just updated here, but we had the first level around 45.10 to 45.15, then into the 45.30s. Looking at the lower time frame here, we still had these lower lows printed on the intraday time frames. This being a short-term pullback phase, dollar still maintaining bullish structure as well. I think that we could easily just see some reactionary lower time frame double tops or triple tops, just showing more sell orders accumulating there and buyers exiting the market, and slowly but surely come back down into 44.65s and even 44.20s. I'm still going to be sticking to gold sells from these two price zones, both on the lower time frame and on the intraday time frame here. So if we continue to hold below, we still got fantastic risk versus reward, solid ranges to play, still on the right side of the fundamentals and on the right side of the technicals. Bringing that over and looking at something like oil, you can see oil is still bullish both on the swing trading time frame and on the day trading time frame. This is for exactly what I'm telling you. You still have a dual blockade, a Looney Tunes cartoon style blockade of a critical waterway, no resolution there. And we still don't have any deal confirmed. And we have this new problem of Iran having leverage now, seeing themselves as an authority in the Strait of Hormuz. That's a problem for anybody with free trade in the global supply chain. So we still have we still have the Hormuz blockage. We still have ceasefire talks fading. And we have no shift there. Sorry, I brought up the wrong one. Where on the day trading time frames, I was looking at a similar area we used for buys early in the week. And also, if we snap back above 93, I can see a reaction at this demand zone, support created, or a continuation back above 93s on the minimum to go back into the 95 target, but potentially back into the 97s and higher. So it does look like with the supply disruptions, demand becoming even hotter and more in focus going into the hotter summer months, the seasonal changes of demand still being high, oil can still be bullish on the swing trading time frame and on the day trading time frame. Another thing I've been looking at is dollar pairs, specifically focusing on Euro USD. Euro USD has been in a bit of a consolidation here. I'm assessing that it's a bearish accumulation. More sell orders being accumulated to potentially continue lower. Now, what's unique about Euro USD? Well, number one, the European Union economy was already weaker than the US economy pre-war. Now, you also have that the Strait of Hormuz disruptions hits closer to home geographically to the European Union than to Asia Pacific. So you still have that difference in economic health. The US economy is bigger, stronger, healthier, more resilient than Europe. Then, of course, you have the Feds having more of a hawkish stance, taking a slower approach to rate cuts now. I still think with Euro USD, if we continue to hold this pullback area at 1.168, even a deeper retest into 1.178, these would be my two pullback sell zones. If we finally start to fade this support, whether today or next week, this would be a good continuation zone, a breakout style trade, more for intraday traders and momentum-based scalpers. So this is where you could still see maybe after a pullback, even if you miss the pullback area, short-term reaction here, assess this as a bearish accumulation, still have these lower lows being printed, still maintain bearish structure, and go down into our target points of 1.152. We still have all these fundamental reasons, which are very similar to what we're talking about on gold, keeping gold bearish or oil bullish. You still have strong US jobs data and resilient labor market data pushing back rate cut expectations, but not just that, having the focus in the dual mandate being on rising inflation rather than the labor market. And of course, you still have the Strait of Hormuz disruptions and weakness in the European Union economy. So me personally, gold pullback sells, oil pullback buys, Euro USD pullback sells. And I even think that there's going to be a gap this weekend with more escalations, and the gap's going to be in our favor too. That's how confident I am in maintaining conviction in this bias. So far, we've had some mixed headlines of damage control, but nothing has changed with the macro image. Nothing has changed with pricing and structure. Price hasn't proven me wrong yet, and fundamentals haven't proven me wrong yet. So there's no reason for me to really risk manage or go against my bias. I'm still going to maintain patience and conviction to continue there. Now, obviously, stocks are a completely different beast when you're looking at how they've been focusing more on AI growth and these huge IPOs outweighing the energy crisis. So I'll let you take over on the SPX and Dow breakdown, NASDAQ breakdown, if you want to share your screen on market there.
Yeah, bro, absolutely. Get that going.
I know your call's been killer there. No high risk, high reward sell bullshit. Just
Nah.
sticking to the pullback buys, bread and butter of riding the greed train, the gravy train, higher and higher. It still looks pretty valid.
Yep, that's it, man. That's it. First thing I always mention to people when you do go over markets, especially because when we open the charts, right, and we see this sell-off, a lot of people get concerned. Oh, this is it. This is the top. You can't be rating one small pullback as the end of the market, right? We're going to see pullbacks. Pullbacks are healthy, like we went over with IMRA yesterday. So the main area I'm really looking for on ES today myself is going to be this pullback area that market provided down here near 74.80, 74.90. Ideally, I would want to see us sweep this low over here. Pretty sure we could add our drawings tool. Let's see. There we go. So I'd like to see price come down to this low right here. See if we could sweep that low.
Maybe even do like that cash open, extra little liquidity grab right to the market level, snap back and just buys right there.
Yep, exactly. See if we could make a lower high on our way lower, sweep that high, get a bit of a lower time frame market shift back to the upside, which lines up with our higher time frame and our bias, and just take that from there, right? We're much better off taking longs to the downside versus taking longs on the breakout.
100%. And obviously, the main focus has been the huge IPOs coming, the amount of liquidity flooding in the system from that standpoint. But when do you think that disconnect is going to start to narrow of when energy prices are up higher for a prolonged period, and now everyone goes, wait a second, AI is costing a retarded amount. AI is costing a crazy amount. You think that's going to be in this next month?
No, not yet. Nah, not yet. It's, you know what it is? We need everybody at this point. I feel like a majority of people are still reading it as, oh, we're in an AI bubble. We're in an AI bubble. They just, for whatever reason, people are still shorting when we're making all-time highs.
100%.
I feel like those people, right? Those people need to sort of shift their narrative. Once everybody starts believing that, oh, okay, maybe AI isn't in a bubble. Maybe we are going to continue higher. That's when we're going to start.
That when the mass sentiment says, okay, this is not a bubble, it's time for buys at the fresh peak highs, then they'll be used as exit liquidity there.
Exactly. I'm definitely going to be keeping an eye on NASDAQ. NASDAQ was crazy, man. We broke 30,000. We ran to 30,800 in a matter of a few days. At this point, we're at, absolutely nuts. I'd like to see sort of the same situation. We have a fantastic pullback area on market at 30,050. That would definitely be my main spot that I'm looking at for NQ today. Now, we could also take a quick look real fast. Yeah, I mean, something else I would mention, guys, and from a day trader perspective, right? Now, we know from a higher time frame, we're definitely bullish. But from a day trader perspective, we have been getting a lot of downside moves during that New York session open. And again, that's where psychology comes into play too. All these traders, market opens, we're at all-time highs, they're instantly buying. They're not doing any analysis. They're not breaking down the fundamentals. They're buying highs and selling lows.
100%.
You know, it's not the way we want to approach the market. We want to be able to take advantage of these dip opportunities. VWAP is another great, just sort of overall bit of a confluence, mainly because it is volume based. But overall, we're just riding the trend. Don't fight the trend. Trend is our friend until the end of the trend. You know,
100%. What are you thinking with jobs data coming up tomorrow?
Oof, that's going to be tough. I want to see jobs data start to get impacted. Now, jobs data is usually the last one to go in terms of the economy starting to hit a wall and crash.
Especially with like global supply chain, you'll have the commodities prices impacted. Then, of course, your manufacturing prices paid, your producer inflation. Then it hits the services, the consumer. Then it hits the jobs data pretty much at the end of the chain there.
Yep, exactly. So jobs that I'm not too concerned on. I think you're spot on. It's funny, earlier before the stream even started, I was thinking to myself, what are we going to break down? What are we going to talk about? And I was saying, all right, well, let's talk about how jobs data, this NFP we have tomorrow, it's probably going to be pretty neutral. Like you mentioned, we're not going to get that huge reaction. Markets are just not digesting economic data to give us an impulse move like it usually does.
Yeah, there hasn't been as drastic of changes in data
No.
where we're potentially might start to see the impact on jobs data, like you said, in the next month or two from the
Yep.
energy crisis and ongoing Iran war. But I don't think that time is yet, especially when we saw Jolt's job opening was surging. Jobless claims been in neutral territory. Even the ADP private sector report was still pretty good this week as well. So I do think unemployment rate is going to tick higher by zero point 0.1. But
Yeah.
if you remember with what the market focuses on in terms of Fed expectations, Feds were expecting unemployment rate to be at 4.5 at the end of last year. So the fact that we're still at 4.3 is actually a quote unquote good thing in terms of their expectations, right? So if unemployment rate goes up to 4.4, it might bring a little bit of short-term impact for like some dollar bears, gold bullish pullback. But I think it's still going to end up getting faded out because the major market focus in the dual mandate of the Feds will still be inflation data. I think unemployment rate is going to stay the same, 4.3, maybe a tick up to 4.4. And I think NFP is still going to be healthy anywhere from 120 to 150, a pretty neutral range. I don't think there's going to be anything crazy, shocking good. And I don't think there's going to be anything recession risk worthy. Neutral to slightly optimistic data, still having the focus on inflation figures and potential any escalations or resolution of the war. Markets are still betting a resolution can take place, but with Trump's sporadic behavior, it doesn't look like that's coming anytime soon, unfortunately. Iran has completely removed uranium talks from the discussion. We don't have any confirms of who's going to be the new Strait of Hormuz authority. We don't have any confirms of even the simple things. The real simple economics of oil being bullish, inflation rising is the dual blockade, right? Yeah. Even if there wasn't a dual blockade, this war would have stopped having impact a month or two ago because no one cares about more missiles unless there's fresh infrastructure damage, or no one cares about a ceasefire if nothing's going on. But when you have a ceasefire going on and you have a stalemate with a dual blockade in a critical waterway, something so unique in context to this war, that's the main thing impacting the supply and demand economics of oil, natural gas, fertilizer, impacting freight costs, shipping costs, import-export fees, impacting vessel insurance premiums and everything along the lines there. So that's the real reason costs have been rising, manufacturing prices higher. It's not just these guys attacking each other with missiles. It's that Looney Tunes style dual blockade. That's why you've seen Trump highlight so many times, oh, the blockade is over. The Hormuz is safe. Go ahead and travel through it. And then you hear about a vessel trying to go through and get their engine room blown up by a drone or by a missile, right? So both the US and Iran are still enforcing their blockades. So I have no reason to shift against my bias there. I'm still going to be looking for those gold sells. I think it's going to be some nice sells. Maybe that could even be held into NFP if the labor market's neutral to resilient. This might be that peak pullback area, still potentially hold this zone or a little bit higher at that resistance point. Don't really see a break above, still be in lower low and lower high structure. And then, of course, with no resolution of the war, resilient labor market data with the signals we've gotten from JOLTS, job openings, and jobless claims, dollar still stabilizes and gold goes back down to those same lows. A very repetitive pattern.
Yep, absolutely. Absolutely. And we see the bearish structure starting to form again. So, yeah, if we hold below that recent higher low we have from, what's that, Tuesday overnight, 3 in the morning,
even if we retest right into there again, it's a great sell zone, in my opinion, where structure is still the same, pricing is still the same, and fundamentals are still in our favor. But one thing is, as we're starting out a new business month, very early into the new business month, from our perspective as technical traders, you can get those like monthly wicks formed, those monthly candle price setups, which I think is exactly what we're seeing take place, especially on gold and dollar. But even going into the cash open around the corner and with a Zoom session I'll be running for my live trades, I'm still going to be looking to follow the market levels, market fundamental drivers given to you, market bias given to you. Everything you need is right here, right?
Yep. That's it. Let's see. We got a question. I saw some stuff online about FlipWatch being added recently. Can you explain what that is? Pull
Yeah,
your
sure. Do you
screen up.
want me to show my screen?
Yeah, let's do it.
Is it there?
I know some of the assets don't have it at the moment.
Yeah, so it depends if there's anything fresh,
ES does.
but ES does?
Yeah, ES has
Okay,
one.
perfect. But so basically, FlipWatch is something that we were introducing to help you better play defense and better manage risk, right? So obviously, most people are always focusing on attacking. Our first priority was to help you attack more efficiently, help you have more confidence to hold trades further, help you have more confidence not to second guess positions or micromanage with every little lower time frame move. But the market is not just about attacking, it's also about defense. It's a game of strategy. We're risk takers, we're road runners, but we're also risk managers. We also need to know how to play defense, how to preserve capital, protect capital, live to trade another day is what I like to say,
Yeah.
right? So we want to give you guys something that could help you better play defense. On top of already giving you catalysts of what could flip the bias bearish, we want to put more attention on catalysts that could hold more weighting, more importance that you need to keep an eye out for. For example, obviously, this is the US stock market, but a major central bank potentially being more aggressive with tightening conditions, tightening that liquidity valve can be bearish for stock markets to give some profit taking moves from such record highs, a pullback. So, about 12 hours ago, we had Bank of Japan considering a June interest rate hike. On top of the Middle East tensions, this was giving stocks a little bit of a pullback from the new highs printed. So you can see that stocks had a reaction to this, but the bias is still holding steady, right? That's the key here. This is something to watch out for, but it hasn't flipped your bias yet unless you get more headlines adding on to this. Then you may see the bias flip, which would update in market anyways. The day trading bias would flip and it'll tell you why. So we just wanted to give you guys more on-screen alerts, more on-screen signals and cues of, for example, when headlines come in real time and it can still support your bias, like we were getting those ceasefire headlines, the same time ES was hitting a support, and you can see it live that this is coming in. It's holding bullish for ES and it's populating here to give me more support. But we also want to help you play defense. So that is what we introduced with FlipWatch. We also introduced Market TV, right? So I don't want to watch myself right there, but we also introduced Market TV, where now you can watch your favorite streamers like Kevin and I, Nalab and I, right? And you can also have the widget on your charts here. So you could be watching real-time price action and how prices are setting up. I'm going to dive into the 5-minute time frame here on gold as we're potentially coming to a key execution point, in my opinion. You could have your Bloomberg TV going, Market in the Morning Show going, all of your headlines coming in. You have everything you need in one view. Let's go through it. So I'm trading gold. I got a quick update of gold. Gold is still bearish due to hawkish Fed repricing, and of course with Middle Eastern tensions going on. Day trading time frame for me is bearish. Okay, I want to stick more to the bearish side then. Well, we're currently seeing a pullback, and we have some pullback areas of interest given ahead of time. That means that if I retest this area and still hold, bears are still in control. The technical structure has not changed. And I could still be potentially coming down to a key target level also given here on the screen too. Now, there's always events coming out that can feed into your bias or take away from it, whether it's reactive events like you can see headlines here, or whether it is calendar events like you can see over here, right? Now, we don't really have any notable calendar events today. NFP is tomorrow. But if I'm looking at pricing and I see more headlines coming out that can support energy crisis worsening, dollar bulls, higher inflation, resilient labor market like jobless claims still in healthy territory, whatever it may be, then I know the fundamentals are still supporting my bias. And if we hold these areas, even looking at some reactive price action of a confirm or deny process, if we can come into a reactionary double top here, a liquidity grab into this area and the cash open, then we're going to have fantastic ranges to play of 1 to 3 RR down into the target level here, right?
Yep.
So for me, with fundamentals, I always want to have a bias that's rooted in objective fundamental research and reflected by the technicals. So like you were showing us, going out to the hourly time frame, we're still bearish on different time frames here. Whether you want to come across and draw a trend line from these highs, whether you want to draw a trend line at the current pricing, whether you want to look at the lower lows and lower highs being printed here, right? Nothing has really shifted. All I'm seeing is very similar to what we saw take place here, of a low being printed, short-term pullback phase, slowly but surely nothing changing with the fundamentals and still having an ongoing energy crisis, bearish structure, bearish bias, holding below key levels here with potential ranges to revisit those lows and even print lower lows. I am pretty heavy with my prediction that there could be more escalations this weekend and lead to a continued gap down on gold and gap up on oil. Short-term gap down on stocks that'll get faded 1 hour after the open. Not nearly as much impact on stocks, obviously, but on gold, dollar pairs, and on oil, I'm still playing those same fundamentals. And the reason I've had so much confidence in the fundamentals, even with the thousands of headlines and noise, is that market's bias for day trading has been consistently bearish on gold, I would say 80% of the time since 5,000. Market's bias has been 80% correct on oil from every bounce buy at the demand zone. Market's bias has been correct on Euro USD for those bears from every single sell retest. Because as the headlines come in and you may have difficulty understanding it, at a click of a button, you can break down a headline, get the information, understand what it's impacting and why. And even more than that, the noise gets cleared because your key fundamental drivers here get populated as the headlines come in. So I know that there's still more catalysts for escalation. I know that there's more headlines feeding into rising inflation and Feds being more hawkish. I know there's more concerns around the world about an energy crisis and rising inflation. So those fundamentals in the real world supporting my bias exponentially increases my confidence to stick and maintain confidence in the same conviction and same trading plays. It's been the same playbook for gold and for dollar since the start of the war. You get escalations, energy crisis worsens, gold prints a lower low, dollar prints a higher high. Then, because it's in government's best interest to keep dollar controlled, otherwise you got currencies weakening to hell with them doing currency interventions. And of course, it's in their best interest to keep oil prices down. You get damage control. Why do I call it damage control? Because it's not an actual resolution to any problem. No problems of the war are being solved. It's just damage control to control the mainstream media machine, to control pricing, to control the narrative going on. So you'll get headlines that a deal will be reached soon. Hormuz is open. Everything is looking great. Iran's going to give up their uranium. This causes a pullback. Gold from the lower low will do a pullback. Oil will do a bearish pullback. Dollar will do a bearish pullback. But then once the noise and dust settles, as more optimal pricing gets retested, as nothing has changed structure or pricing wise, those pullbacks get faded out. So looking at gold here, you can see that's been the case even from midpoint of the war from April here. Hence, the more favorable plays as a day trader has been bears. If you've been selling gold more times than you've been buying and patiently awaiting those pullback areas, you're going to have more wins than losses. And it's clear with the structure and pricing. And the beautiful thing is market has been bearish through this timeline. Even with some of these larger pullbacks here, it's still been bearish. And when you're on the right side of the trend, supported by fundamentals, you have more confidence to hold positions further. But not just that, there's also more opportunity for any risk-free runners to run a marathon, to see trend extended. So let's just say something like when we had this lower low printed and we had a bit of an extended pullback phase where there was talks of a ceasefire, great deal being reached. A lot of traders who took the buys get trapped. From here, we didn't just retest the same lows, we also printed lower lows. It's almost double the size of the move overall compared to the bullish pullback. At the end of the day, that's still something I'm anticipating with the war escalating, us maintaining this bearish structure and still having ranges down into these lows. We might get this pullback, retest the same low where the pullback took place from here, then also fade out and still continue to crush price down into fully filling this range on the higher time frame, still seeing this bearish channel respected as well, which I think is going to take place into the end of this week with neutral to optimistic labor market data and, of course, weekend escalations of the energy crisis worsening and gaps in our favor. I think this is just setting up prices ahead of time for that.
Yeah, no, I'm with you on that, right? Markets are always forward looking. Institutions are always trying to get price to the best position for them to position in. They don't want to buy highs. You know, they want to buy on a discount. They don't want to buy at extremes.
100%. So I'm still going to for sure be looking for this type of price action. And I even think, for example, with some of these aggressive pullbacks, you can see they get faded out in triple the time. The psychology behind is that you get all these buyers pulling into the market. Then you slowly bleed them out. You keep creating these false supports, like a bottom is going to take place, like you're going to flip. But if nothing really changes with the core problem, you're trapping liquidity to be used as exit liquidity on the other side and continue fueling order flow in the direction supported by the fundamentals there. Yeah. So I'm going to be expecting that same thing as we either potentially double top in this active pricing area, retest into 45.30s. I'm going to expect those retests into the cash open, NYSE open. And I don't think it's going to be an impulsive move back down. And I'm okay with that. I think it's going to be a slow bleed out the rest of this daily candle, the rest of the week with a little bit of NFP support, and then even a gap down with weekend escalations and energy crisis worsening.
Yeah, no, I'm with you on that. We had a question in the chat, just asking your opinion. What's your guys' opinion on the oil COT report? Ever since the high in March, the big money has been adding shorts weekly.
COT, I know a lot of people like to look at COT because they want to feel more important that they're looking at the order flow of these institutions and hedge funds. But any information that's publicly released and delayed is useless to us as traders, right? These major institutions and funds are not actually disclosing the majority of their positions because then they'd be giving up an edge. Why would you just fucking actually publicly disclose what you're going to do? That's like Trump saying, hey guys, I'm about to do some insider trading right now. I'm about to release a headline in short oil. Like, that's not how this corrupt game works. So COT is cool if you want to look at how the higher time frame is running, but you can just look at a weekly chart, right? Yep. True fundamentals are the events that come out, whether reactive or database, that the algos react to right then and there or start to adjust pricing to. COT positioning is delayed, it's lagging. It's like trying to trade based off indicators. You're already behind. You would have a much better opportunity having better trades just looking at raw price action and the fundamentals going on. So
you know, it sort of reminds me, the COT report reminds me of 13F filings. Have you heard of those?
Yeah, like where they finally disclose what they're going to do. Like, I'm going to put this in this stock. I'm going to do this. Like, it's already done. It's already done and dusted.
Yeah, so the 13F filings, like Michael Burry, people with hedge funds of $100 million or more, they have to file 13F filings when they buy or sell something, but they have to do it 45 days after the end of each quarter.
Yeah, right.
So they could tell you, Burry could be like, oh yeah, I'm shorting NVIDIA. Meanwhile, that position, he could have closed that out a month ago and he could have taken it 3 months ago.
100%. COT is very similar to that.
Yep.
Anything where they're trying to tell you, like, for example, COT is also similar where a lot of people love these public bank reports. Oh, I love this JP Morgan investment analysis. I love this research report from Morgan Stanley. If they're releasing something to the public for free, use your brain. Use your brain. Information and data is the biggest commodity in the day and age. These hedge funds pay millions of dollars to potentially keep their information private, to have security teams enforcing that no one gets access to this information, whether it's their algos, whether it's their positioning and so forth, right? So to me, COT is just way too delayed of information. It's cool to look at if you want to do some research and general economics analysis, but is it really going to help you with your day trading? I don't think at all.
Yeah, I know. I mean, we could even look for an example. Here's the ES on the COT report, right? This would have been like, oh, wow, large speculators have been bearish on it for months now, and yet markets are still pushing higher with a lot of strength.
Exactly. And that's a great point as well. These guys may be setting bets up that could take place 6 months from now.
Right.
Because they have the margin for that. They have the time, they have the resources and capital where they already have exposure across assets. They might be hedging certain bets on one asset and then setting up positions on another asset that could play out 6 months from now as their projection, right? Yeah. So you don't actually know what their true plans with these orders really are. Are they hedging bets? Are they planning for something 6 months from now, 12 months from now, right? It's not even good for swing trading at all. COT is just for retards that want to feel smart, to be honest with you guys.
God.
Yeah, just to be honest with you guys.
Any of those public section.
Any of those public bank reports like, oh, I got a JP Morgan 15-page PDF. It's just for retards that want to feel a little bit smarter, that they got like, oh, I got this cool report, or I saw what the banks or COT positions doing here. But that's not true fundamental knowledge or useful information for your trading at all.
You know what's more actionable than the COT report? Market TV.
Market TV, right there. These guys right on the screen, right there.
Yeah,
sick setup though. Market TV is a sick idea, right?
Yep. Bro, it's going to be awesome. Guys, you could watch us every day right here on the Market TV tab. If we're not live, we have our Bloomberg terminal, Fed Reserve for any Fed meetings. And you could, like G mentioned before, you could have it playing and pull up your news feed and watch the news headlines come out the second somebody says something with relevance.
Right now, headline coming in, Israeli military siren sounded amidst a hostile aircraft. So tension still potentially coming in here. Something we need to keep an eye out for. Just go to the all filter right now. I think it's coming in still. Yeah, right there. So we're still getting potential violations of a ceasefire. Ceasefire very fragile. Potential of more escalations on the weekend. A lot of the optimism being counteracted just as fast as it comes in, but expecting slow bleeds back in our direction to trap traders on the other side. Oil start to find a support after the cash open, slowly trickle back to the upside with a weekend gap for us as a cherry on top. Gold retest a supply zone, still have an energy crisis as the main concern. Dollar stabilizing as your world reserve currency, slowly fade out that bullish pullback, trapping buyers. To be honest, this is going to sound sick and twisted. Whenever there's an aggressive pullback on gold and I fade it, I literally think about all the retard buyers buying every little support as it's going back down. They're like, oh, a double bottom. Oh, a support. Oh, let me buy this one. It's going to flip here. And it just keeps making my profit go deeper and deeper. I know that sounds cocky, but that's only specifically with the playbook we've been running for this Iran war with the dual blockade. I know that the damage control pullbacks are going to be aggressive. You get news of a ceasefire or you get news of optimism or a deal, gold pops up quite aggressively. All the retards start trying to chase buys while I fade that move and sell it. And then as it's slowly bleeding back down, making quick little lower time frame supports, they keep trying to buy. It's going to flip here. No, it's going to flip there. It has to go up now. Please go up now. My funding challenge breached. And that's exactly when I withdraw my profit. And I think about that. And it's a good feeling being a corrupt capitalist like myself.
Bro, the trading strategy that never works. Hopes, prayers, and saying please to the chart.
Yeah. I've seen some villagers do some voodoo. I've seen some guys praying to the charts, blowing on the candles like they're like, I mean? Not really with the gay shit, but yeah. Why are you blowing on a big green candle? You gotta go focus on something better. You know what I mean? Anyways, Hezbollah launches rocket and drone attack on northern Israel, triggering security alerts. So very key headlines coming in as we speak. Now, I don't, like we said, not nearly as much impact on stocks with the AI tech sector optimism, but way more impact on gold, oil, dollar. I do think after some cash open liquidity grabs, we're going to see those buys set up on oil and dollar. Euro USD bearish, gold still sticking to those bears. So far, a nice little lower time frame double top on gold, just lining up the technicals of buyers exiting from a institutional perspective and sellers coming in. And I think like coming to the gold chart here.
Yeah, let's check it out. Let me share your screen. Now, I was going to say before you, I know you got to head out soon. You want to set us all up with some nice key levels on gold?
100%. So this is exactly what I'm going to be expecting here on gold. I'm going to be looking at the current zone, which was the pre-New York market level, then market update to this zone, and I'm going to be looking at 44.90. Now, I don't think we're going to break 44.90 right away. I think it's going to start to create false supports to trap buyers, and we're going to be reacting to these same zones, but back to the downside with aggressive little bullish lower time frame moves, trapping the retards so I can use them as exit liquidity. So we're going to see continued rejections here. A short-term bounce, fade it. Short-term bounce, fade it. Yeah. Even a bigger bounce here, fade it. Fade it, fade it, just like this. Them keep trying to buy, hoping it flips every little time. Probably go down and triple the time we went up, but I do not mind. That's going to be the psychology of playing the same playbook of damage control, no resolution, fade the pullbacks, stick with the fundamental and technical trend, and await your optimal pricing. Don't be afraid to lose. Go for 1 to 3 RR trades. Understand with even a 60, 50% win rate, you're going to be very profitable. So don't tilt on your losers. Don't over leverage and so forth, and keep continuing to play the playbook until there's actual resolution. Now, for scenario purposes, what would be a real resolution with this war? I know it's been noise. It's been a mess. We would need to have confirms. The main thing is the dual blockade being removed. That is the main thing when you clear all the noise. The dual blockade being removed, Hormuz going back to pre-war conditions, no authority there, free trade. After that is having a set in stone agreement on uranium enrichment and what's going on with Iran's enriched uranium stockpile they have. Third biggest is Lebanon being a part of a permanent ceasefire, permanent end to the war. When we look at those three big factors, what do we have going on actively as we speak, clearing the noise? Has the dual blockade been removed? No. It's there and it's being enforced. We just saw the US attacking a vessel last night. We saw Iran attacking a vessel a couple of days ago. Has there been any agreement on enriched uranium? Zero. Iran took that off the table and nothing going on with grabbing the enriched uranium. Has there been any confirms of a respected ceasefire between Israel and Lebanon? No. Israel is still occupying Lebanon and that's still active as well. So no deal, damage control tactics, repetitive playbook, prolonged energy crisis, where even with a stalemate, every day that goes by with no escalations, but the Hormuz still closed, is compounding damage for an amplified fallout and huge impact on inflation that central banks need to reprice and reposition for accordingly. So this is exactly what I'm going to be looking for on gold, while keeping an eye out for any Trump bullshit headlines of, hey, the deal's been done. Iran just Amazon Primed me their uranium. I just got it to my front door now. They sent me it on Prime delivery. Jeff Bezos brought the box to my house of Iran's enriched uranium. Going to be looking out for some bullshit like that. But if it's not confirmed by Iran on a deal or opening Hormuz, nothing has changed in the macro image here.
No, got to remember that too, guys. It's not so much, oh, the headline comes out. Yeah, sure, we might get a market reaction if it is something extreme. But we are getting headlines every few hours, right? We're so close. I don't know if you remember, like last weekend, we're finalizing the deal. And it was like, okay, it's like the 15th finalized deal. What are you talking about? And then later that evening, the U.S. attacked somebody. It was like, what are we doing now? Are we just throwing headlines around? But we know this, right? From 100%. Joining these Market in the Morning episodes, we know they're just planning to drag this on.
Right. And this is the beautiful thing. When you're looking at something like oil here, even though oil had this bearish move, which may lead to people jumping in late sells, Market didn't shift the bias. Market adjusted of having the same pullback area, which aligns with key demand zones technically, and it's still looking at the weighting of fundamental drivers. Market's still clearing the noise. Has anything actually been solved? No. Okay, so nothing's changed with the supply and demand economics of oil. You still have supply disruptions with no demand destruction. Demand actually rising in the summer hot months. And same thing on gold here. Even though you had this larger pullback, it didn't shift structure. It didn't cause any flip watch alert. You still didn't have it outweigh the bearish factors. So gold's day trading bias still remains bearish. Pullback areas still remain intact. And then you can see as headlines are coming out in real time, you're still having escalations take place. You're still having Hezbollah attack Israel, Israel attack Hezbollah, tit for tat, flexing their guns, just showing that diplomacy is not being met. There's no respectful deal being made there. Ceasefire is not being respected there. And it's just a lot of misinformation and damage control, which in the age of social media, like Trump said, world's a casino. No crying in the casino. Either you learn to play the game and you take advantage, or leave the casino. Nobody's forcing you to be in here. Yep. Right?
Dude, I hope Trump doesn't think the world's a casino. He's going to bankrupt this one too.
Yeah. That was he had a bankrupt casino, right? Was it the Taj Mahal one? Or?
Yes, sir.
Right?
He bankrupted the casino and like 7 or 8 other businesses as well. And US is going to be number 9.
Yeah. Crazy times to say the least. You know what else I love about the market dashboard is the amount of shareability. And I don't think that gets covered enough. How you could like take a screenshot, a quick snippet of your chart here and highlight everything you need. You can share a major headline that come out and share it in your trading communities, share it in your trading groups, post it on social media, keep everybody informed and in line with you, show them the value market has to provide. Same thing with the playbooks as well, right? Looking at the playbooks, for example, especially with the playbook of NFP tomorrow, everything is just right here, ready for you to go. So I just love how intuitive we made the platform, how interactive it is, how everything moves hand in hand for exactly what you need as a day trader. Nothing is wasted on the market dashboard here.
Yeah, no. And it's just improving week after week.
100%. But anyways, man, I got to head off. I don't mean to be yapping so much. Hopefully everybody in the chat has enjoyed the value, the lessons, fundamentals, technicals, psychology, banter. Hopefully you guys are educated, gaining value, knowledge, and also entertained. We're going to be doing these shows way more consistently. We're going to be having this integrated on the Market TV, like you can see. So you can have us, you can watch us right as you're watching the live real-time charts, headlines, keeping an eye on calendar events. And just every day you guys go through this process of looking at the bias, levels, headlines. You don't realize you're training yourself. You're training yourself you're training yourself on a systematic approach to the markets. You're training yourself on how to better take risk and how to better manage your risk. You're training yourself on how to clear the noise, understand what's impacting markets and why. So you're not just gaining value of taking winning trades and preventing losses. You're also just getting smarter, wiser, sharper, faster, which is our goal at the end of the day on the market team.
Absolutely. And you're gaining the exposure, the experience, and that's going to build confidence in what you're doing.
And at the end of the day, this isn't the last war, and there'll certainly be many more to come, whether it's a trade war, cold war, real war, and you're going to be better equipped to handle those situations in the future from your day trading time perspective.
Yep, absolutely. Guys, Jeep, thank you so much for being here. What a killer episode. Thank you for being here till 9:20. We got New York session in 10 minutes, guys.
100%, man. Thank you so much, man. I'll give you a shout, eh?
Absolutely, for sure. And everybody, make sure you guys stick around as well. G, we're going to take you off. Wonderful. Appreciate you. Yes, for sure. Definitely make sure to stick around so everything downloads correctly. Guys, I'm going to still be here for the next hour, and the lab is going to be joining us as well. So let's get into some more actionable price levels and some key setups we could look for going into the New York session market open. So first thing we want to take a look at is going to be ES and NQ. I'm sure you guys noticed a little bit of a change to my charts. My trading view refreshed yesterday, whole new account and everything. So first thing we're going to note, right, we're going to find some support resistance, smart areas where prices reacted to in the past. And we see right over here, This has been a support zone, 75.80 to 75.90. Friday, Monday, Tuesday. Here we are Wednesday. We broke it, held as resistance. This is the point that I want to see if we can find a short position on the S&P 500. Yeah, W Capital hungry for sure, man. Jeev is the GOAT. Market is here to stay, and we're here to make trading just that much easier for you guys, that much more understandable, right? You join these streams every morning now, get some insight, understand what kind of news and headlines were coming out, and be able to take advantage of that. So S&P, some shorts on a short-term bias, right? Come over to our ES, ceasefire relief, offsets Bank of Japan tightening. Yes, sir. Appreciate you, Blaze. Absolutely. Labor data and AI looms. We're still on a fundamental side of ES, much more bullish. Again, like we mentioned before, though, we do have to be careful because pullbacks are going to happen, right? So don't be so zoomed in on a 15-minute. Don't be so zoomed in even on an hourly. Give yourself that advantage of looking at a daily time frame. Look at a weekly time frame, right? We have had 8 weeks in a row on the S&P 500. It's, I know I said Jev or Jeev. They told me G, bro. 8 weeks straight, right? We got 8 weeks straight from these lows, low to high, 19, almost 20% on the S&P 500, 1,200 points. Guys, this is one of the biggest rallies in history. Now, like Imre was mentioning yesterday in the Market in the Morning stream, this kind of rally is rarely sustainable. Does that mean right now we're just going to suddenly flip in reverse? Absolutely not. What it means is to be aware, but we still want to continue following this trend. We still see that buyers are still taking us to higher highs, and higher lows. So what do we want to see? We want to see support somewhere, but we also want to recognize the selling pressure that stepped up here. So here we see some selling. Let me get my drawing tool. There's our brush. We had a seller step in. We had volume start to increase. We did not have the biggest of increased volume. Look at how much of a bigger drop this was. This is after we had our very high CPI reading. Markets pulled back 3% on heavy volume. Now we're seeing a pullback, but volume is not as strong. What this tells us as a trader, guys, is this is not selling pressure. This is profit taking. We were just at all-time highs. This is profit taking. Could take a quick look at our equities at the moment too. We're going to throw them on the daily time frame. And let me just save this on TradingView. So interval, symbols, all that fun stuff. Perfect. So what do we see? We see a mixed bag in our equities. Apple was just at all-time highs yesterday. Hit a brand new all-time high, rejected back lower $5. Amazon is not near its all-time high right now. It was about a month ago right now. At the moment, it is 10% from its all-time highs. NVIDIA also in a very difficult spot. NVIDIA is not something that I would be like, let's short it right now. NVIDIA has been fighting and continuing higher, and it has a major level to keep an eye on at 240. The reason 240 is such a strong level on NVIDIA is because that marks the $6 trillion market cap price level. So because it marks that $6 trillion market cap price level, there's going to be a lot of reaction at that zone. There's going to be people taking profit. There's going to be people selling against that. There's also going to be retail looking at the news headlines that say, oh my God, NVIDIA, $6 trillion, equities, retail pumps into it just for price to reverse from there. Just something to keep an eye on. Other than equities, though, we can take a look at oil. Oil has been in an extreme range. We have our highs around 104, our lows around 80. At the moment, we're trading at 92. This is a middle of nowhere. We do not want to trade this. We had 3 green days in a row the past few days, but there really has been lack of follow through. And like we mentioned before, lack of volume. When there's lack of volume, lack of follow through, and price is in the middle of our area, where it's in the middle of our area instead of at an extreme, this is when we know this is a no trade zone. Whether you're on the daily time frame, a 15-minute time frame, when price is not trading at your predetermined spot, there is no reason for you to take any trades. If you do, you're just gambling, and you might as well flip a coin, and that'll tell you the direction you're trading. Now we could take a look at gold, and we could see that our trade setup right here lines up with exactly what G was telling us, that 45.60 here on GC futures. This is where I would like to see some selling pressure, as we've been creating a lower high, a lower low, lower high, lower low. So can we come back up towards this 45.50, create another lower high, and take that back towards the next lower low? An extreme and huge trade right there, just following those fundamentals and moves. Awesome, bro. Yes, sir. Guys, we have Nalab joining us momentarily, so make sure you guys have our like button ready, have the subscribe button ready, and of course, join us every day here, man, Monday through Friday. Join here for free. I absolutely love hosting these streams, and I love giving you guys that insight and information that is required to be successful traders. Now, as you'll see here, right, our chart is divided into two. We have two charts. We have gold and we have the dollar. These should be inverse from each other. So what I like to do every day before I even take a trade on gold is take a look at both of them on the daily. Are they showing good momentum, some continuation, which will help justify strength in the other? Or are both of them, like we're seeing right now, showing an extreme range? Showing an extreme range. Hey, bro, I appreciate that, man. Makes my day to hear comments like that. One question. Yeah, when news comes out for ceasefire, gold moves up like a skyrocket, but escalation starts again, gold did come down like that. Why? So it definitely depends, right, on how markets and institutions are actually pricing in the headlines that we're receiving. So what we usually see is we see that, oh, there's an escalation, gold moves higher because it is our safe haven. But ever since the beginning of this Iran war, we also have to take in for account the justification of, is gold at a good point to buy? And when that Iran war was beginning, we were already seeing a steady decline, and we were at all-time highs on gold, above 5,000. It is massive, everybody. Now we're down from those all-time highs of 5,600, down 20%. Listen, if you're a long-term investor, this could be a great place to start adding to your long-term portfolio. If you're a day trader, we still want to try to follow that momentum and see if we can make our way towards that 4,200 and 4,000. Guys, we're going to bring on the lab right now, and we're going to break down some more levels. New York session opens in 2 minutes. The lab, bro, good morning.
How's it going, Kevin? Good morning, man.
Doing good, man. Doing good. Killer stream today.
Yeah, it's absolutely amazing. I was watching the first half of it and very, very informative. Love the trade ideas that you and G were giving out. Plus all the context that's currently going on, and it almost feels like it's a back and forth, right? Yep. Like you have ceasefire talks happening, then you have those being walked back, you have escalations happening, then you have talks about ceasefires happening, and then more escalation. So all of it is just a big shit show, and we're here to guide every trader through it because we understand what's happening in the markets, and you understand this because you're on Market in the Morning every single day, calling out these positions, calling out these trades, showing what's happening to the community, and we're more grateful than ever. I know you guys already went through the Market TV update and Flip Watch. We have a ton more coming, especially with drawing tools, you being able to draw on the chart, save your drawings, much more chart customizations coming to market this week. So tons to looking forward to. The team is dialed in. Let's jump into the markets. We're about to get cash open, so New York Stock Exchange open. So I want to call out something. We planned out amazing analysis from the start of the week, Kevin. From Monday, we were talking about ES buys. We capitalized on the buys. I'm just going to share my screen here.
Yeah, go for it.
That's cool. Honestly, I thought I was sharing my screen. I was moving my screen like I was sharing it. Yeah,
bro. You know what? We could pretend.
Yeah, let's pretend on that. So over here, you can see that we were calling out these buys on ES from the start of the week because of the optimism that currently exists in the market and has existed for a while. So we did just have New York Stock Exchange open, and we'll monitor price action, but let's just have the dust settle. Like let's be a bit patient. Let's exercise patience. We already had data for the day with initial jobless claims coming out at the top range of the maximum, right? So we took these buys on ES. The next day in Asian session, they also played out, and I was mentioning that to keep your eye out on this demand area. You can see that once we started to fail to break this, You got that initial push down in Asian that got bought up, but then got faded out as the market was unable to find buyers that could push price to the higher levels. All right. So that's the type of structure that started printing all of yesterday. Was that overnight we started getting exhaustion happening at these highs. And then here you can see clear liquidation taking place after New York Stock Exchange open. And then that drove us down to this price point where we bounced off, initial bounce off, and then came down, took out these lows, lower high formed. We failed to hold back above 75.25. Remember, sometimes you'll see that the market pushes below the recent lows, grabs that extra liquidity, better buy price for buyers to jump in, institutions jumping. And then if we start respecting above the same level again, in this case, 57.25, we would have had chances of going up. But you can see that clearly did not happen, and it failed to happen as the selling pressure continued from this area over here, which led to these new lows overnight. We also talked about that this is a very good intraday buy area that we will specifically be paying attention to. Last Thursday, if you guys remember, those who tune in often, we called out these clean buys into all-time highs because of the inflation report that came out, jobs numbers, plus the overall sentiment that we've been riding for past months, right? So we called out those buys. This is a known demand area, so it made perfect sense that we could get some nice intraday positioning to align ourselves with the market's day trading and swing trading bias. Market also has a deeper pullback area, which also shows you that even if we push down into here, if we have escalations come through, that we can still find the buying pressure that can drive us right back to those all-time highs. As you and I know, markets are very, very greedy. So you need to keep in mind that even moves like this outflow that I even took advantage on the sells up here, on the shorts up here, because it's a high risk, high reward setup. You're shorting at all-time highs, multiple failed exhaustions going into it, but you have to keep in mind, this was my exit. My exit was down here. My exit was here because what if this zone bounces off? What if we bounce off this zone and then we push back up? So this is where you have to think about it in terms of probabilities, is that since we are bullish in the market and we have been catching these clean intraday buys and calling them out, that it's best that I exit here because I don't know whether the market's going to reject here. And you can see instantly within that minute, within that same time frame, we had the low form and then we had a bounce, right? Yes, the bounce didn't last, but it's still a 20-point bounce that ES had before over the course of the day and the session, we created the new lower time frame low. So this is where you have to really keep in mind that this sort of outflow just leads to better positioning to align by market participants with the overall trend. In that case, being bullish on both the day trading and swing trading timeframes. So what I did was I also attempted an initial buy over here, which got taken out, but it was covered with my short side and the profits from my short position. So I was able to utilize those profits to take a lower risk short. Since this was the third time we were reacting to this area, I didn't use the full risk that I used on this position, or I would have used on this secondary buy setup here. So this didn't play out, and now I have this buy. I have 3 buy positions in from 29, 30, and 33, and I'm riding those up. Those are my intraday plays now. Do you see what I mean? It's all about positioning. Is that despite this play, we waited. Now we have these high conviction. As I was mentioning, Kevin, do you recall us talking about A+ setups, A++, A+, and A level setups? And this was that A++ setup because it gave us a nice liquidation, good pullback, better buy price. And as soon as we tapped into here, you can see how lower time frame started reacting. So before that, we can see the zone is pretty clear. It's this general price band over here that extends from 7,500, let's say, just because it's a round even number. We know markets love round even numbers. Yes, absolutely. We'll go through CFD pricing, the futures pricing, but the main point is that the underlying asset is still the same, right? Yeah. So you have to keep that into mind. Regardless of what you're trading, we have micro gold contracts. We have gold contracts on market. We have XAU USD. We have GLD if you trade the ETFs. right? Regardless of what you're trading, the underlying asset is still gold in that case. The underlying asset for SP 500, if you trade CFDs or if you trade futures, ES1, is still S&P 500 or SPX, or SPY, whatever it is, it's still S&P 500 is the underlying asset in that case. So that being said, that this is our intraday price band area, and when we were looking for some sort of tap into here so we can start to see how intraday price structure shifts and make our way back to all-time highs. Imri made a great point yesterday, and this is something we've previously talked about as well, and Imri brought it back up, is that, hey, the person benefiting from stock markets being at highs is going into the midterms is Trump. So us going into the midterm, what do you think is going to happen to the stock market? Do you think this bullish sentiment is going to continue to hold through, or is it going to be lackluster and we get outflows? No, you're going to get that continuation of this trend, and then you're going to see Trump celebrating when S&P is sitting at 8,000, and he's going to be like, when I came in April 2025, we had S&P at 4,800, right? That's almost that's a 70% increase in the U.S. equity market since Trump's presidency and tariff war. Well, not since the start of it, but since the tariff tantrum, right? So now we can see when we go into the lower time frames is that as you start coming into here, this was around 7 p.m. Eastern, 8 p.m. Eastern over yesterday night. Okay, so this is Asian market hours, Asian Pacific hours, and then this was later on in Asian hours. You start to see a bit of rejection into here. What we start seeing now is that we broke past this high in the lower time frame. Okay, we created this new high in the lower time frame, breaking past this one. Now what I start to notice, okay, if I'm looking to position myself for an intraday time frame, I'm looking for a tap of the zone or to get back close to these lows so I can see how price can start reacting. And that's exactly what happened, is that we came down here, we start reacting earlier on in New York session. This reaction happened, and I started taking buys around this area as we were building this 1 minute price action, because this tells me I'm back above these lows, I had just tapped into this intraday zone that we were waiting on this entire week. So when you have something planned, you know that we can pull back. Our day trading bias is bullish. This is what can drive this ceasefire research globally. We know that the AI optimism and the overall optimism in the US equity market is holding the most weight, that any escalation that happens like this one over here gets faded out exactly how we called it when this escalation was happening. And we even called it before, is that when S&P was over here, that, hey guys, there might be an escalation this session, and it happened like 30 minutes or 15 minutes after. And you guys can watch that live session to see exactly how we broke it down. Kevin, if you don't mind dropping a link to that, if you can find a link and drop that live session from Monday, that was a beautiful session where we called out the escalation that could have potentially happened. It happened at 9:15 a.m. and boom, markets came down, but we called out the buys because we said, hey, markets are delusionally optimistic. This escalation is going to get faded out. It's nothing new. These guys are just playing the game, playing chess on a global stage, and it's theatrics. It's theatrics. And what happened is that buyers came in, and then hours after, Trump comes out saying there's peace talks going on. This is just theatrics. You have to play the game. You need to learn how to position yourself so you can benefit from moves like this. So you're not caught up in moves where you're getting outflowed. You're seeing these outflows and you're scared. You're seeing red candles, and as Jeev was saying, you're blowing on them. You're hoping they're going. This is strategic, right? This is strategic positioning. So now, as you can see, I can keep my position here running. So if I open up just over here and I just show this long position, is that my target still remains these all-time highs. Yes, I'm not expecting for it to go instantly there this session. I don't care if it takes 3 days, 4 days, 5 days, but my positioning is in. And that's what's best about having good positioning, is that now I don't have to chase shittier setup. I don't have to chase breakout above this high, hoping that we continue to this level, because I have optimally positioned myself from the lows. And I know that if we come down here and we start pushing up, maybe I'll look to stack another position, because that just adds more confidence in my analysis if we start respecting it. That oftentimes the market's going to take a long time at a price point before it's ready to go and rally. And that's exactly what happened here over a course of 3 days. So for all I care is that this position could go up here, come down, retest this area, come down. Point being that I'm positioned in a point where my stop loss is still here. It's not getting moved just because we're getting this play, because this is an intraday play. If I'm a scalper and I take these lows, I'm looking to exit around here because that's a 30-point move towards the upside, right? You don't want to get greedy. So it all depends on what type of trader you are. And this being me being an intraday trader, I like to take this position where there's a higher risk reward. Plus, I'm aligned with the macro bias. So I know that even if there is an escalation, so what? Okay, maybe we drive a little bit deeper into the zone and then eventually buyers jump in because the markets are so delusionally optimistic. Amazing. That's way better than me trying to buy a break of this area, right? That doesn't make sense. And you'll see a lot of people do that at market open, is that open range breakout, right?
Yep.
Well, guess what? This open range broke out. And what happened? We just came right back in, right? So it's like you have to keep in mind that you want to be positioned from the most optimal areas, such as these lows, sells from these highs, buys from these lows, buys from this known demand area and these lows, post data in the direction data plays out, plus with the sentiment. So all of this paints a beautiful picture and allows you to take advantage of on a higher scale. And so you can profit with the whales. And that's exactly what's the main point, is that if you see these massive moves happening in the market, right? In the financial markets, you see these massive move happenings regardless of what you trade, whether you trade oil, whether you trade gold. And speaking of gold as well, is G was talking about the gold sell analysis. And this is the gold short that we called out on Tuesday, Kevin. It played out exact. And Jeeves was mentioning that it doesn't matter how long it takes, the move's going to get faded out. He's like, it's going to be a slow bleed out, but it'll happen. And that's exactly what happened on Tuesday in the trade we called out on market in the morning, done live. And just to the lows, that was a 1 to 5 risk reward setup. And if you remember, people were talking about taking buys off an IFVG or whatever. I don't know ICT concepts, but that side I know was looking for more bulls on gold because of this move. But the point being is that macro-wise, we're bearish. So right. This sort of move towards the upside is eventually going to get faded out. This is coming out of a low from this most recent price action, and we're going down to this higher time frame low. So what do you think happens when we see that those sellers actually jump into the market? Let's say, hey, okay, maybe it's not from this area. Maybe it's from this higher price sensitivity area, from anywhere from 45.25 to 45.40, maybe even 45.50, wherever it's from. The point being is that gold is currently bearish, and those escalations are going to happen. And when they happen, you can see that we do get that controlled outflow. And what the best thing about opportunities like this, and is exactly what we mentioned on Tuesday, was the psychology behind positioning here as well, is that the market had just rallied 1,000 points from these lows over here. 1,000 pips from these lows. Do you really think we're going to see excess buying take place in the coming session, given that gold is bearish, given that we have data playing out that's stronger for the dollar, and now we also have a break out of this area? Of course, we have a higher probability of going towards the downside and not rallying, right? So it's the same principle. It's the same thinking, is that, hey, we're at this high right now. Gold reacted here. Let's have a look on how it reacts. Maybe we push higher. And if we push higher and we don't see sellers jump in, doesn't mean that the actual intraday play and the higher time frame play is buys. It means that maybe we're just pushing into this price point to see how sellers react, if buyers start exiting over here. Because what's a better sell point? Is this a good sell point, or is this a better sell point? Of course, the one higher, right? So that's what it's about, is that you align yourself, you don't get faded out. Like the amount of people that are looking for buys in this gold move, and Kevin and I were like, hey guys, we're gonna get a clean short. It's gonna play out. And the point is that you want to be aligned with the buys. It doesn't matter how long it takes, it's gonna play out. And when it plays out, we're gonna be taking advantage of it. And Kevin, I don't know where you exited, but I exited right at these lows over here.
Nice. I got out at opening price, used open price on the futures daily.
Oh, amazing.
Yeah.
So
clean, bro. Right, yeah, right near the a little bit
like
higher.
you probably got out like right here-ish, right? Like over
Yep.
here. Yeah.
Yep.
Clean.
Exactly.
And that's still even with we had a smaller stop loss on stream. That's still a 1 to 4 right there.
Yeah, it was clean. It was a
Right?
good one. Good way to start the week, guys, with market in the morning.
Exactly. Great way to start the week. And then that's what it's about. It's just about positioning yourself to the point where, hey, even if this pullback happens, and this is what I'm talking about, is that I'm not really concerned because I understand that this is a deeper price zone. Is that if we push into here, cool. I'm going to see how price reacts. I'm going to let my position do its work. I'm not going to get phased out just because I see some price action whipsawing. This doesn't phase me out. This doesn't tell me anything. What tells me a story is what's actually going on in the market. Okay, ES is bullish. Yes, there's a probability that we can push down into here based off of any escalations or just technical outflows to grab better buy price. But we're still bullish. I'm still going to look for buys. I'm not going to look for shorts now after we've just sold off. Is it more wise to look for shorts on the fourth attempt of all-time trying to break all-time highs, or while after we've already sold off? Of course, when the market's trying to break all-time highs for the fifth time, right? That's your more probability, higher probability. So it's the same thing, is that you position yourself to give yourself the best opportunity possible. And that's the same across any market. It's the same across gold, is that I'm not looking for gold buys when I see this 15-minute candle pushing above these highs over here. Is that I'm looking for shorts because I know the downside. Look at the downside potential. Is that the shorts that exist the shorts that are here have such a massive downside play. That's 800 pips towards the downside, right? Versus where you're going to look for buys. If you were looking for buys on this side, let's say you're looking for buys here, you're targeting into these highs, okay? Because you don't know where you'll react, but where's your stop loss? Is your stop loss below these lows? That's a negative RR. You don't want that. The buys are better from areas like this where, okay, you get this push off from these lows. It's a key price point, as we've previously talked about 25s being a key price level. You get this reaction. Those headlines came in about ceasefire and peace over Asian session, and then you have buyers jump in. But that's what I mean. If this is headline driven. This is a pullback that was driven based off ceasefire talks, escalations, and just playing damage control on the war front.
Yeah,
we're not having that right now. We just had headlines come in about further escalations, as Jeev and Kevin were breaking down before I jumped in, right? Yep. So all of these things play out, and that's what causes these inflows, these outflows in the markets. That's what causes massive swing plays like this, right? Or massive swing plays, pullbacks, where people get left and they get confused. They're like, wait, what? I thought we were just selling off. What just happened? And then what will end up happening is that they start exhausting sells at every pullback. They'll exhaust them here. They'll exhaust them here. They'll sell here. They'll sell here. They'll sell on the break below here, right? They'll sell here. And then when the actual sell move starts happening, it may take 2 days. It may take 6 hours. But when it starts setting up, they're exhausted. And at that point, now they're looking for buys because they're like, oh, we're back above here. We're back above here. It's a mental game. It's a psychological game. And everybody and majority of the people fail at it because not only do they miss the complete fundamental side of things and the macroeconomic side of things, but they also get so flip-flopped around, thrown around like a feather in the wind by the markets because they can't control their positioning and they don't understand positioning. So I met Jeev through this old trading chat in like 2017 before he started Capital Hungry, and then he really taught me everything about macroeconomics, trading, how to intraday trade and scalp even. So all of that I learned through Jeev, and then over the course of the time I became like profitable consistently with it. And then I started helping him with webinars on Capital Hungry and just running Asian market streams. So for those people who were in CH, they'll remember, like I used to run Asian session streams from 7 p.m. Eastern to about 10 p.m. Eastern every day. So we used to do those. They used to be super fun. Yeah, and we live near each other. So we're like, he's one of my best friends. And then we started business together. So we were good friends for about like 6 years before we even got into business, and then we hang out every good golden days, right? Those Asian session streams, I remember those. So and this is exactly what we used to talk about back then too, but different macro environment. Back then, we were talking about rate cut cycle, we were talking about tariffs, we were talking about so much different stuff, and that was like around 2023, 2024. That was when gold, we were at like 1800s, and we were calling out buys from here, and about how the October 7th over here, Palestine Israel conflict, it just started bring so much inflow. Then you just had rate cuts being priced in over here as well. You had Jackson Hole Symposium from 2025, rate cuts being priced in. You had Trump coming in, tariff tantrum. You had the outflows happen from all-time highs. So all of this is it paints a beautiful picture. And that's what it's all about. It's about being able to understand the story that's happening and then positioning yourself so that you're in the optimal side of the market and you're optimally positioned from here. Look at this higher low. Look at the change of this structure, guys. Exactly what we were talking about at the start of the week. You can watch every single market in the morning since Monday. We have broken down every move. Before it's happened, the probability of success on when you take buys here versus buys here, like this is like free game we're spitting out, and we do this for 2 hours a day. Kevin, thank you so much again, like for hosting this. Like this wouldn't be happening without Kevin, you know.
Hey, bro, I appreciate the recognition. And yeah, guys, every day you come join, we just made it that much easier to join too, and that much easier to go back and see the previous episodes, right? You're able to say, okay, let me hit my Market TV tab in the Market AI terminal. Say, okay, what was our last few streams, right? Let me go over the JOLTS report stream real quick. Let me see. Nalab just mentioned on Monday that he talked about this. Great, that was this stream right here. Let me click that and see what was going on.
Exactly. Oh, look at that. That's a crazy screen of me with water in my mouth.
I swear I didn't plan that.
Yeah, so I'm just gonna showcase gold real quick, or if you want to put it up on your side, Kevin, no worries.
No, all you, bro.
So gold and even ES here, we can see ES is continuing to move perfectly, and we're not expecting it to be a clean push towards the upside. We don't want that either. Like, we know that if we just get nice movement, we start breaking these highs in the opposite direction. So in this case, we go from creating this lower low structure and lower high structure in the intraday time frame that led to these new lows, or led to this pullback, to now creating these lower highs, higher highs, higher lows, and continuing towards the upside and maintaining above key specific price points. Is that okay? Now that intraday structure has shifted, that pullback phase is now over, and now here comes the extension. And now buyers are gonna position themselves. Yeah, maybe we don't get straight positioning up like this. Maybe we get something like this, where you pull back into this area, don't break it for the time being, retest the next intraday move, maybe after NFP, and then next week we start seeing a better rally towards the upside, which is also fine. But that's what you have to understand, is that that's the game you're playing. The market doesn't move off of your expectations or your timing. The market purely moves off of however long it's going to take for it to position itself. We don't even care if this low gets taken out. I don't even care if that low gets taken out. And let's say gold ES ends up going down to here, retests 75.10 before pushing back above 75.25, and then pushing up. That's fine too. The point is that still minimizes my risk versus if I was looking for buys on the break of this area, right? My risk is still minimal. I'm willing to hold this drawdown. And the way that I like to think about, exactly, beautiful. We're in these gold shorts as well. I entered here. So this was before I jumped in. I was watching the stream, and Jeev was calling it out perfectly. Jeev was saying, hey guys, I'm looking to fade this move. He told you guys, I'm looking to short here. If that wasn't a clear enough signal about what we're paying attention to and what market's expecting, then you know what I mean? I don't know what else was. So that's what this game is about. It's about you understanding where to position yourself, what the more optimal positioning is. Like, look, I'm in this position from here. This is my stop loss. Just because I see I'm in drawdown, I don't start freaking out. I don't start switching my bias, looking for buys, trying to cope. I'm like, okay, let's see how it plays out. If I get stopped out, I take the loss, and guess what I'm going to do next? I'm going to look for sells going into this price point because my bias doesn't change. It's just maybe my positioning was wrong in that case, which is fine. There's always going to be probabilities that play out either on your side or they don't play out. And either way, that's the name of the game that we're playing. That's what this is. It's the global financial markets. It's chaos. It's chaotic. It's going to get you down on your bad days, and it's going to get you soaring on your highest days. But the point is, let's remain level-headed. Let's look at information objectively, because there is an objective story that happens behind every market that anybody trades. Doesn't matter if you trade corn future. Doesn't matter if you trade heating oil, lean hog, all these different types of futures. Doesn't matter what it is. All these markets are influenced by the same concepts and the same factors that currently play out and the catalysts that are ongoing. So we're in these gold shorts. We're in these ES buys from lows. And this entire week has been a very fruitful week. We've called out every single play perfectly. We have called it out.
Yeah, Naz is looking okay over here too for some buys.
Sorry?
Naz is looking okay over here too for some buys coming off of recent lows.
Yeah, let's have a look at that too. Yep.
Support the ES bias in long position.
100%. That's what I mean. All markets move the same. Like we've been pulling back on NAS, we've been pulling back on ES. And it's the same principle, is that, okay, maybe we pushed a little bit lower than these lows over here. Pushed a little bit lower than these lows. But the fact is that, okay, if we start remaining above here on the next intraday period, guess what starts happening? Maybe we get that pullback, and that's the creation of this higher low. Right? Versus you trying to buy every single pullback. But here's another thing, that this area was also would have been a great attempt for a buy. So if you attempted to buy here, guess what ends up happening? You're still positioned very well for this sort of pullback. And at that point, maybe you just set yourself to break even, or you're observing it and you're like, hey, maybe this doesn't look right. I'm going to manage my risk and I'm going to get out. But you were positioned from a point of a price point where it's highly probable for buyers to jump in. So going back to ES, you can see we're continuing. And this is the same, man. This I think I have these two arrows hidden somewhere. Guys, I'm going to need you to ignore all the chart messages that show up right now, because I'm going to pull up this analysis that we did. So this out. You can see that I execute right what I say I'm going to execute. Like I told you, I took this buy after taking the sell. I covered my profits and I took a small loss on this buy. Like I execute what I analyze, right? And then we had a different setup. So here it is. Here it is. Here it is. So now we're coming closer to it. So let's hide these. Oh.
Some Iran headlines coming in now. Nothing.
You want to share your screen real quickly?
Yeah, for sure. Nothing major. Iranian Revolutionary Guard says region won't be stable until Israel quits occupied Lebanese territory. U.S. State Department sees Iranian leadership fractures after killing of senior officials, signals Tehran power pressure. Again, nothing updating, right? Nothing new. Yeah,
nothing new showing up there. So it's the same thing, right? Like you see these escalations come either, and then you have to keep in mind is that there's so many happening that either you get caught up and lost in it, or you're able to understand that, hey, I need something that can help me figure out which is a new one, which is not a false, even like a false flag one. Like yesterday, we had Iran saying, "Hey guys, we're attacking U.S. tankers." Remember that? And then U.S. came out. They're like, "No, they're not. They're not." They came out. State media is lying. Like they're not doing it, right? So now, if we look at this is exactly what we're mapping out. Is that we were going to get that pullback into this area right here. And that's why we had this. We also talked about this setup, is that if we got a push up into here and faded out, we'll get likely another push into these highs before we see a potential break or failure to break. Because the market's not just going to test the high once and then continue down and cause like a 600 point pullback, it's going
Big
to
headlines.
retest it again. So that was the thinking behind the secondary push up in Asian session or whenever it happened after, if this move got corrected. And it did get corrected, got a push up. And then we talked about, hey, either we'll try buys here, we'll see if this area holds, which it didn't. So this was not a high conviction one, but this bottom one was very high conviction, right, Kevin? Like the buys on ES.
Yep. Check this out. We got a bit of a bigger headline coming in here. Trump rejects potential Iran deal, cites U.S. leverage in ongoing talks.
Yeah.
And a lot of headlines coming in right here.
Yeah, a lot of headlines. Well, as long as it either adds or even if it temporarily takes away from my ES bias, sorry, not ES bias, ES current positioning, that's fine. Because even if it takes away from it, all it'll do is just cause a minor pullback into this price zone further, and then more buyers will jump in and perfect. So right now we're in profit here. We're in profit on gold as well, holding steady. So this one will let cook over the next sessions and see how this plays out. Again, as Steve also mentioned, I'm also not expecting this to play out as smoothly. Now you can see sometimes we'll consolidate or create resistance for a few hours, in this case being from 2 a.m. Eastern, tapping into this area all the way till 9 a.m. Eastern, about 7 hours of just consolidative price action within these ranges. But then once the lows broke, then you can see the selling pressure took place over the next daily period and the coming sessions where you had this initial sell-off. And then we'll keep, and then also to mention this sell-off, and then we talked about in our mark in the morning, is that if we get this full sell-off and we see a pullback into Asian session, it'll likely sell off as well. And then that also took place in Asian, which made great entries right around the 44.90s area, which you can see we pulled down right back to the lows and then push back up, retrace, push down. So you can see how gold can do these aggressive pullbacks regardless of what time frame it's in, comparative to this low that was made, right? Like, Kevin, when I'm looking at this low here, you can see this was still like a 76% pullback, right? Like on a fib, for people who use fib, like 0.764, right? It was still an aggressive pullback. And it's the same thing on these intraday pullbacks, is that it is the same sort of intensity. Is that, look, this was likely the 76 one again. It's the same sort of intensity that takes place, is that gold will do these deeper pullbacks. Gold isn't something that gold, when rallying, yes, 100% chugs away, but gold is known to do way more aggressive pullbacks than the U.S. equity market does. So don't let that fade your bias, or don't let that shake you out of your positioning. If you're in shorts from here and you're a swing trader and your target is actually this, and that's where you're looking to position yourself, don't get shaken out just because we printed this low and we pulled back up to here, and you wake up one morning or you're like, oh shit, I'm almost at break even. Let it play out, because this was your original plan, is that, hey, I'm going to target this low because I'm a swing trader and that's where I need to target my low. It's about maintaining that conviction, not only having it when you take the trade, but maintaining it, right? There's so many things that happen in the markets, just like Kevin was breaking down right now, where we have these headlines come in, right? Iran Revolutionary Guard says ceasefire on all fronts, including Lebanon, was Tehran's original condition for war and with the U.S., right? So that headline came out. Agency has received no Iran nuclear data facility access reports. Yeah, right. You guys are going to get data. Iran's Revolutionary Guard says ceasefire on all fronts. Yeah, we saw that one in light of Iran's continue. So all of these ones, something's always happening, right? So it's, when you think about translating that into the charts, is you want to have that conviction going into the trade and maintain it, unless some sort of fresh event happens that completely shakes temporary positioning. And maybe ES ends up doing not a pullback here. Maybe it ends up going down to here, takes out my stop loss in this case, and then pulls back. Now, what does this look like on a higher time frame? This looks like a normal pullback, does it not? This is just an ordinary pullback. But it is still worth it that we execute our position here, take the risk, because maybe it's a game of probabilities. Maybe this is the area where we do print that low in this general price band, and that's what leads to us revisiting these all-time highs, given we're still operating off the same sentiment that we have over here. So I know I've been yapping for a while. Kevin, if you want to maybe share your screen or any ideas that you're looking at.
Yeah, bro, 100%. So I was looking at the same gold trade that you guys took, the shorts. I did not enter yet. So what I would love to see is a bit of a break and retest, right? Where this was our range over here. We broke out of it. I'd love to see a bit of a pullback, find a rejection, stops near the high. I wouldn't put it all the way at the high because I feel like if we do break this level, we're just going to sweep that next. But I do want to try to take these shorts, especially because volume profile, I'm a big fan of volume profile myself, like Imre. When we put it on our 6 p.m. Eastern from last night, which would be our futures market open, it does show our value area highs up here. So we usually want to see us reject back lower. And 4,500 on GC futures, in my opinion, would be a fantastic target. It really has been working as support when we're above it, resistance when we're below it. So that would be TP1. Take profit 2, of course, is that next area of support down here. Looking for a real solid risk reward on this, just like Tuesday.
Yeah, exactly. I'm more positioned for like the intraday side of it. So riding these down right to the intraday lows, which on the CFD one is at around 44.25. Basically the same lows from yesterday Asian session. So that's what I'm positioned for. Again, like if we look at GC on the hourly chart, or on any intraday chart, you can see that even in the last intraday lower high that was printed just on Tuesday, the lower high, it took several intraday candles before the market was ready, and we had enough sellers in the market to drive price down and to continue that higher time frame and intraday macro positioning that all institutions and banks are aligned with. So even if this doesn't play out this session, as long as we get our entry, even if we get stopped out, keep in mind gold is still bearish on intraday basis. So all these pullbacks, these moves are just going to get faded out, right? Just like on ES, any escalation ends up getting faded out. So we have to keep that in mind, and that even if maybe we don't break past this this low over here, right? Maybe we don't break this, we actually rebound from here. We get what Kevin was talking about, a pullback. Maybe you get some short entries here. This continues, this sort of bullshit continues to happen for the coming session, coming hours. And then maybe going into Asian hours, we break, retest. Then you see that shift in price action where that lower time frame starts shifting towards the same intraday basis and bias that led to this outflow from gold. So that's also to keep in mind, is that, yes, amazing, we're getting this outflow right now. But if we bounce off of here, or if we push a little bit, bounce back up, we can continue to build orders in here. And as Imre would say, I think he calls it create that value. Is that what I think he calls it? That value creation happening here. And then which can lead to those further sellers jumping in, order flow generating in here, retesting of this price point once we're below it, which can make for further sells, just like these sells that we took, right? We broke it down. We said, hey, if we break below here, I'm going to look to get in on the retest. We got in on the buys. Kevin called out the retest over here. And then we took profit at the intraday lows, which was a 700 plus pip move. So now we have that same positioning now happening almost identical. Where's my short that I'm in? So identical, that if we break out, or even if we create a lower high here in the lower time frame, we can start to now correct this pullback towards the downside in a slowly but surely manner over the next intraday period, and then eventually go back to these intraday lows that we have towards the downside over here.
Beautiful. I've got a couple questions in the chat. We have, would you ever consider doubling down? Noah, you could go first on this.
Yeah, absolutely. Absolutely. So what I mean by that doubling down is that, let's say I'm in a 2% risk position on these ES longs over here. Okay. With my analysis, this is the move I was waiting for. And I'm in a 2% risk over here. So meaning that if my stop loss gets hit, I'm going to be down 2% on my account. Now, let's present a scenario that, okay, I get this initial reaction. I see the structure has shifted in the lower time frame. I saw we broke past these highs. Okay, we created this high. Now, what if the market does something like this? And the market can do whatever the hell it wants to do, right? What if the market does something like this and it comes right down, it's below my entries, right? My lowest entry is below my lowest entry at this point. And what I start seeing is that price starts to kind of consolidate here, create some buying support. And I start seeing, okay, we're likely just tapping into this key price point to grab more buy orders in the market for more buyers to jump in. And if we start pushing up now, I'm going to likely add another position, depending on how confident I feel in this analysis. And that's where that conviction needs to remain the same. Because if you're looking to double down, your conviction better remain the same as it was up here. You shouldn't get phased out because you're in drawdown. I like to think about drawdown as a temporary rent that you're giving to the market, right? It's not permanent, right? Drawdown is just temporary. So don't be afraid to hold through positioning. And that was also one of the biggest shifts for me, was how to go from scalping to intraday. Intraday positioning can take time. Nothing has to happen in the same hour or in the same 30 minutes or in the same even session. Like, it is intraday positioning. It could take 2 days, 3 days. For all I give a shit, it could take a week. But the point is that we just want to be aligned. We want to be aligned with the market. We don't want to be fighting the market. We want to be making sure that if we're trading ES, we're aligned with market's day trading bias. That's bullish. We're looking out for what could flip it, like what could potentially take us out of here, what could continue this. AI optimism, improving US-Iran negotiations. We understand that every escalation gets taken out, gets faded out. So let's continue to fade out these pullbacks that happen that are just corrective structure, right? Let's continue to fade out these pullbacks, just like how we did on ES. Let's fade it out on gold on the opposite end. So that's how you translate everything macro into the financial markets and into trades. Because without that, you're just focused on technicals. And what it may look like to some is that, wow, we had a sell-off, we broke these lows, now we're just going to create a lower high and continue down. Maybe, but that's likely not the case because we're macro bullish. And we know that if Trump comes out and says, guys, ceasefire deal is almost here, war is almost done, guess what ES is going to do? ES is going to end up back at these highs because the headlines are so optimistic, right? And you want to remain on that side of it. So just like how we were talking about on gold is that, hey, it wasn't time to buy. It's time to sell gold, right? Just like how we sold here after a massive pullback. We faded that entire move. Runners ate, runners ran all the way down to here, right? Still have a runner going. That my positioning for that runner, it's 10% of my original position is down here. That's where I want it to be. The stop loss for that is at break even. So we almost tapped it, but you know what I mean? So, but now I've also stacked for the next round of day trades, right? I've stacked for the next round of it. So in this case, I'm in these shorts and I'm looking, and Kevin's in these shorts, and we're looking to ride this down on the next intraday period. And this is also now positioned for NFP. So now let's break that down, guys. Let's go to the economic calendar on market.
I'm still here. I'm having some technical difficulties.
No worries, Kevin. No worries. You let me know whenever you're good. I'm just breaking down NFP. So we have an unemployment rate tomorrow. And this is the main bread and butter for the week, as we were talking about, with a forecast and a bank forecast as well that we have on market. So this is a forecast of the top institutions. This ranges from Citibank, JP Morgan, Goldman Sachs, Reuters, right? Reuters has their own poll as well. So that's what it ranged from. And they're expecting it to be 85K, same as the retail forecast. A prior of 123, minimum of 40, and a maximum of 130,000 jobs. Okay, so that's your institutional expectation ranges between the minimum and maximum, where you see that there is a minimum, even if there's a minimum of let's say came out at 51,000 jobs, that's below forecast, it's still not below the minimum, because that's what matters here. Is if we blow past this minimum, like 49, 48, the lower it is, the more volatility we'll see, right? The more slack it will be taken as in the labor market. On the other hand, if we push above the higher ceiling of the maximum expectation for NFP, in this case being 125,000, that print would be great for the dollar, right? Anything bullish above the maximum, you'd get a very bullish dollar. And on the opposite end, on gold, you'd get a very bearish gold, because you have good jobs number, correlated to dollar, that's going to bring that outflows from gold, just like how it is. And in that case, we'd be pre-positioned on NFP and on the right side. Same with US equities. If we got a great print, we're going to see that continuation towards the upside, maybe some short-term whipsaws, but we're going to see that continuation towards the upside as well. On the other hand, when we look at unemployment rate is forecasted to remain the same at 4.3 minimum. Usually unemployment rate will have the same minimum maximum expectations, meaning 0.1 above or 0.1 below, because unemployment rate very rarely spikes up, let's say 0.2%, 0.3%, right? So even the prediction markets here, there's a 37% chance right now that the leading outcome is between 50 to 100K. But we know that the top band of that expectation institutionally is actually 125K. Okay, so keep that in mind, that even if it comes off 100K and it's above the forecast, we're still between the maximum. The markets, the institutions know this, the algos know this, is that this is the maximum expectation in this case, right? Same with unemployment rate. When we come out higher than expected, you get a more bearish dollar, right? Because that means that there's slack in the labor market. There's cracks in it. The markets are going to start pricing in increased chances of rate cuts, hence leading to a bearish dollar. So when you get data, not only is it important to understand how it impacts the base currency, how it impacts what you trade, how it impacts gold, any market. You can click the drop down here and search up any asset, whether it's NVIDIA or whatever you trade, Tesla, ETH, Euro USD, BTC, oil futures, whatever it is. Click it, find out, click the playbook. And then it's also important understanding how the data comes out together. If you get mixed data, the chances are bad unless you're already pre-positioned. Let the market do its thing. Let the dust settle. Let's come back 30 minutes after, see how price action develops, and then look for trades, right? We don't need to take them right after data, and that's not what we do. We like to wait for data to come back. And yeah, so I just logged into markets integration on TradingView here. And we're going to be releasing this very soon for all of our users. So you can see we've already done a ton of updates this week, and we got tons more coming, guys. We're very, very excited to continue giving you the best market fundamentals platform that exists.
Yes, sir. Yes, sir. Absolutely.
Yeah. So sorry to continue off of NFP. So let's say we got good jobs numbers and we got good data for dollar. Now what that's going to happen is that, let me hide my drawings over here because I like to keep them for when this analysis plays out. It's like a nice little boost to your confidence, Keep your drawings, keep your analysis, and then every time it plays out, you build that conviction. So let's say we're already positioned for NFP. We're in these shorts, and now somehow we end up here before NFP, and we get good job numbers. Maybe we'll get a quick liquidity move, and now at least we're positioned. And then those good job numbers can be the catalyst that guides us down towards the downside, because it'll also mean that dollar is seeing that inflows. If we get bad jobs numbers, right? Let's say we get bad job numbers and gold is somewhere here before NFP, bad job numbers comes off, gold shoots up. Guess what I'm going to do? I'm going to look to see how the market reacts near my positioning. Are we going to see a lasting longing effect from this? Not unless we're outside these maximum ranges or minimum ranges, right? Unless it's something not expected by the market, then maybe we'll see a pullback back into here and maybe even take out these highs and go into here for better sell positioning. Doesn't mean we're switching into a bullish bias. We would just be maintaining that bearish bias, but be looking to position ourselves from a higher price point once the market has done what it needs to do for this data report, right? Algorithms, institutions acting on that data report. Once the data is released, markets pricing it in, they're going to do their whipsaws. But once they're ready, we're going to be ready to attack Aikido style, karate style, like full on karate chop to the neck. That's what I'm looking to do to gold, is that if it comes up on bad dollar jobs data tomorrow into these sell point price points, I'm looking to karate chop gold sells right at this price point, or maintain or manage my position and see if we push higher, then I'll look to execute sells here. That's what it's about. It's about knowing, okay, if I'm positioned, it's forecast. If I position myself from sells here and gold pushes down, and for NFP tomorrow, that means I have a better optimal positioning for NFP.
Right. Right. Absolutely. It's all about positioning yourself, being forward looking, right? We say the markets are forward looking. We have to be forward looking too.
100%, man. We have to be very forward looking, and not just in markets, in all aspects of your life. You know,
Yeah.
like, hey, what do the next 6 months for you look like? Are they optimistic? Are they like, are you on a trajectory where the next 6 months, based around the people you're surrounded by, the things you're doing, that you're going to end up higher than where you are currently? You know, it's that foresight. It's the same type of foresight in the markets that, hey, if I get stopped out here, I need to know exactly how much I'm losing here. I need to know my loss here. In this case, my loss being, if I take a loss on this trade, that's going to be about, it's a $1,500 loss. But that's my risk for this. It's because I felt confident of taking that risk, and now my risk reward is 1 to 3. And guess what? I'm okay with this because I went into this position knowing I'm okay with losing that amount. But even if we come close to my stop loss, I'm not going to manually interfere because this is what my positioning is about.
Absolutely. Absolutely. Great breakdown. And you know what you mentioned before too, the gaining confidence from when trades move in your favor. That confidence will help you hold trades longer, will help you not stop out of winners too soon, right? Confidence comes from conviction, and all of that comes from repeatability, right? Coming back into the market, doing the same thing over and over, seeing the same results, getting mixed results, and saying, okay, how can I adjust my trading strategy according to how market conditions are changing?
Absolutely, man. Beautifully put. Beautifully put. And like, it's so cool. I think it's fantastic that we're able to come here every morning and break things down and watch them play out on an intraday period. A lot of people are calling trades for 10 points when shit's selling off. They're calling shorts from lows. Like, okay, that's, you're just riding momentum trades, but being able to forecast, hey, if we push down here, this is perfect positioning for institutions to align themselves with the higher time frame bias on ES, right? With the day trading bias, lead us back to all-time highs. Now, this is a very great 1 to 3 risk reward positioning. And we know that our probability to head off here is higher. So when we're able to do this and really forecast these moves and analyze them, call them out, plus take the trades ourselves, is that, and then they play out, it adds to my confidence, it adds to Kevin's confidence, it adds to your guys' confidence in trusting markets, in trading with fundamentals, because you understand that everything moves for a reason. There's nothing that happens randomly. Everything happens because there's events going on in the world. Like, look at ES. ES, thank God for an amazing trade. You know, thank God for an amazing day here. Like, gold sells played out perfectly, right? If you're in those, take some positioning depending on how you're positioned, whether you're a scalper or an intraday trader. I'm eating off these ES buys right now. I'm up about 40 points on these ES buys. Beautiful. And I'm looking to ride those and maybe secure some partials into this area over here. That's where I'm looking to take this into. And then the rest of my position can run off, let's say 70% of my position runs off into this area, right? Yep. But the point is that, hey, I just took this from an analysis I did days ago, and I patiently waited. And along those times, I capitalized on other opportunities that we analyzed, took some risk, didn't play out, okay with that, executed greater risk at a higher probability area, continued to fade out gold buyers because gold is not bullish. We were just coming off of lows. That's what it's about. It's about being able to understand the fundamental bias on each market you trade, right? Whether you trade GC, whether you trade gold, understand that it exists and then trade based on it, right? Trade the market. Don't push against it. Don't be looking for sells when you know the market is just aligned with buyers. Like that is just, you're just going to be chasing a tail at that point.
Absolutely. Absolutely. Nas has a nice rip, man. I called Nas was in a good buy zone when it was around 210, currently around 312, 317 right now. Really clean move. Love the momentum. VIX has been moving lower. I'm a big fan of using VIX as a correlation when trading ES and NQ. If we get a lower VIX, we should be looking for a higher ES and NASDAQ as well.
Yeah, 100% agree. 100% agree with you, man.
Beautiful.
And man, this is beautiful positioning, guys. Like a lot of this will play out into NFP in my eyes. I'm looking to secure 30% of my ES positioning as we push into here, just because it's always good to take some money off the table. Same with gold as well. As gold pushes into this area over here that I have that I had marked up as where we had previous selling take place, and then buyers jump in here overnight. This would be a good area to exit some gold sells, and even that would end up being a 1 to 3.75 risk reward setup. And then the rest of that gets extended down to the previous intraday lows, making it almost a 1 to 7 risk reward setup. That was called live on stream by Jeev and Kevin. On ES side, with my short positioning, is my long positioning, the intraday move, that gives us a proper 1 to 3 over here when this trade completes. And now you have a higher probability given any intraday pullbacks, right? You can see they're quite normal. Like here's a great example. We pushed up, pulled back down, and then continued. You get what I mean? It doesn't always play out right away. You'll see your price points get tapped multiple times, and sometimes over the course of a few intraday periods, and then we push up. So let it play out. Let it play out. Let it do its thing. Exactly how you mentioned. Let the market come to you. Take those risks. And when it comes, you better be ready to take those risks, right? Any new headlines? Doesn't seem like it. Yeah. So
guys, don't forget, like and subscribe, man. We're doing this Monday through Friday now. This started months ago where it was, let's do Tuesday and Thursday, give you guys a little bit of insight into market, widen it to Tuesday, Wednesday, Thursday. Now here we are running it Monday through Friday, man. What more do you guys need from a platform that was already outperforming every other software out there?
100%, man. And that's what we don't focus on dumping data on you guys.
Yeah.
We focus on doing all the heavy lifting. Is that when you know you're in a day trading bearish bias, you're not going to get manipulated into thinking otherwise when you see this bullish pullback. Is that you're going to keep your eyes on the prize that, hey, we have been bearish on gold since the start of the war, since 5,000s, as G was mentioning.
Yeah.
Right?
Yeah.
We've been bearish on gold since then. So why are we just randomly, because we see some minor intraday pullback on a largely bearish trend, why are we going to switch our bias? Right?
Never.
Why are we going to change our bias? We're not. We're instead going to double down. We're going to keep our position open from here, the runner, down to these lows. We're going to get in on more sells. Even if NFP comes and we get good jobs numbers that lead to a stronger dollar and weaker gold, and gold pushes up into here, guess what? I'm going to short. I'm not going to buy into these highs. I'm going to short. That just increases my risk reward.
Yeah. Yeah. Now listen, you don't want to bias hop, just like you don't want to strategy hop. You're just going to find yourself inconsistent and frustrated.
Yep.
Awesome, man.
Absolutely, man. Absolutely. This has been such a great session. That we've been able to call out amazing positioning in the markets. We've shown you guys exactly how we arrived to these theses, how we took advantage of what is happening. I just need to move one of these on to a different screen.
And the lab's just gonna flashbang us first.
Yeah, sorry about that. It was needed. I need to show you guys how intense this is, how intense it can get. But yeah, Kevin, do you want to share your screen?
Yeah, bro, absolutely. Yeah, so gold never ended up coming back towards that retest area I was looking for, so I unfortunately did miss gold. I did end up taking some NASDAQ there. NASDAQ was a tough one. I tried some longs over here, moved in our favor, stopped out, waited for confirmation. We moved back higher with strength. Once I saw we started to hold through this blue zone we have right here, that's sort of near our point of control, I took some longs on another scalp for about 40 points, made back the loss and then some, right? That's the whole goal in trading too, is to be able to manage your risk properly. And the lab was mentioning before, we're not just traders, we're risk managers. And quite honestly, when you're a beginner trader, when you're at that point that you're just sort of getting the ball rolling, you shouldn't be so focused on, I got to make money today. Your focus should be on, how can I manage my losses? How can I take 3 losses in a row and still live through my account and not blow it in one day, right? Traders get started with even prop firms and they blow a prop firm account in a day or two. Guess what? Your goal isn't to make money. Your goal isn't even to get funded. Your goal right now is to manage your trade so you can hold the account for longer than a week. Give yourself short-term, achievable goals and use market to help give you the right hindsight, and use these streams to help give you the right clarity to take yourself to that next level.
Yeah, that's beautifully said. It's you want to be in, if you're a trader, your focus should be, I want to be in the markets for the next decade, 2 decades.
Right.
You should always be looking to position yourself with that sort of mentality and that sort of outcome. Is you don't want to be chasing the next trade. You want to be improving, and you want to be focused on how you can reach the next level. What does a trader who's been trading for 30 years look like? How's he operating? That's who you need to grow into.
Absolutely. You're right. It's not a get rich quick scheme. You're looking to build a skill that you can use for a long time. And that's going to be a repeatable aspect, a repeatable strategy, and something you're comfortable with, right? We always talk about, some people trade the orb or ICT concepts. Every strategy works, just like every strategy doesn't work. If you don't have right risk management, you could try every strategy under the sun and find yourself going nowhere fast. If you have proper risk management, you can make an EMA strategy profitable. So it's all about that time. It's all about putting in the effort, putting in the hours, and having good discipline. And of course, using tools like Market gives you that insight, and it really does give you that edge to say, okay, I know right now fundamentals are pushing us higher here. I know right now fundamentals are a little bit stagnant. Let me size down in my trade, right? Remember, circling back to risk management, if we don't have strong conviction, we either size down or we stay out.
Yeah. Beautiful, man. I'm loving this positioning, bro. We're eating this today. This entire week has been very, very fruitful.
Absolutely, bro.
We called out, I don't know, by Tuesday, we had called out 5 winning trades across NASDAQ, across gold, across ES. We had called out 5 trades. I had personally taken 3 of them. So I had already taken 3 to the start of the week. That's what I mean. It's been a very fruitful week. The markets have been very given. They're not always like this. The markets aren't always moving very cleanly. As you can see, a lot of people got caught up in gold buys. We were on the right side. Even today, a lot of people were buying into this session, and now gold is selling off. It's okay if you're buying from here, from the lows, right? From the lows overnight, but if you're buying into these highs, you're not on the right side. So you guys stay tuned, like we do this every single day. We're calling it out. There's tons of updates coming. Kevin, if you mind pushing it onto my screen.
Absolutely.
Tons of new updates coming with Market. We just came out with Market TV, and this is probably going to start speaking here before I do that. Oh my God.
Sick, bro. So sick.
Yeah. So I'm right here. This is weird seeing myself here, but you can see, like, you can do this live. That's a little trippy there, but you can pull up to it, show trade, whatever you market you trade, you can pull it up on Market. We're coming out with more advanced charting. We have tons more features coming, and we're just very excited, guys. We do this daily because we love to. We love to show off what we build, and we love to show you how it does all the heavy lifting. Is that you don't have to come to the markets and start doubting, like, oh, how am I going to get through this session with all these headlines? We'll guide you through it. We'll show you what is actually a high impact headline and what's not, what actually caused market movement on USD JPY 9 hours ago and what didn't, what is just a breaking news headline, because these are the things that develop market narratives. And then when they develop market narratives, they get assigned to what the impacting bias factor actually is and what could actually flip it. So it's always things happening that can either take away from the bias or add to it. And things that take away from it cause movements like this, cause the pullback, right? And things that add to it, they're all going to be listed right here. So I appreciate you doing this, Kevin. Kevin, guys, got to keep in mind, Kevin doesn't have to do this. Kevin doesn't have to do this. I don't have to do this. Jeev doesn't have to do this. Like, at the end of the day, we got a software company to run. Market, at the end of the day, is a software company. And And the best part about us being a software company is that every single one of us is a trader. So we can hop on here, and as the CEO and co-founder of Market, I can break down the financial markets because I trade them. And I'm not just some tech guy trying to sell you a product. I understand markets. I call out these trades, and we do this shit for free because we love to. It's in our blood. It's in our it gets me up in the morning. It doesn't let me sleep at night. You know what I mean?
Yep, absolutely, bro. Absolutely, man. It's about the love of the game, the passion for it, dude. 100%. Guys, man, don't forget, if you haven't already, hit the like, hit the subscribe. If you're here on Twitter, make sure you like and share it with your friends. I mean, this is the best information anybody, any stream can provide, right? Always insight, always strong clarity, reasoning behind the trade, stop losses behind the trades. This is a no BS zone over here. And it's good that we recognize that.
Absolutely, man. So let's keep smashing it. Guys, keep tuning in. You're going to see, like, it's going to get to a point where every single trader is not going to be able to trade unless they have market open on TradingView or market open on their dashboard. Over the years you've been trading, when would you say has been the most difficult? The most difficult part was the first 3 to 4 years when I started trading, because I had zero ideas that the fundamentals move the markets. I had zero idea about that. And all I did was just look at technical patterns, and I would get caught up on the wrong side of the market every single time. I would be thinking I knew what I was doing, but I didn't. And I chased my tail, lost about $70,000 I was about 19 to 23 at that time, and I had lost about $70,000 of my own money before I even made a dime in the market. So that's what the changing factor for me was, when I focused on learning fundamentals, and I learned from Jeev. He's the one who taught me, and then we ended up building a platform. So after that point, it became much more easier, and I had more conviction in what I was doing. So the hardest point wasn't any market environment. That's not the point of it. Anybody who tells you it's hard to trade right now doesn't understand what's happening and doesn't trade. You know how many gurus or people that charge you guys $300 a month, $1,000 a month, right? $5,000 one-time fee, $6,000 one-time fee, have no idea how to trade these markets, and they say, oh yeah, it's so difficult. It's not difficult, man. Like, we're calling out these moves with precision. It's because we understand market positioning, psychology. We understand the actual fundamental drivers, economic data, the headlines that come in, what's actually building bias, what's taking away from it, you know? And at the end of the day, what it results in is it results in like successful, profitable trades. Like, I don't know if you can see that. I have about $2,000 floating right now from these plays, because we're taking these these moves as it happens. So the difficult part isn't what time in the market. It's the knowledge gap that exists from when you don't understand fundamentals to when you'll understand it, and you'll operate with that conviction. And then you'll see gold over here where now it's dumping, but you're not going to get phased out by these buyers. You'll know to look for sells. Guys, that gold position is fucking munching right now.
Crazy, bro.
It is amazing plays, guys. Wow. Round of applause. Kevin, you got any sound effects?
Bro, of course I got some sound effects.
Yeah, throw some round of applause, bro. You know what I mean? So same with ES. I'm still comfortably in this ES bias. And guess what? I'm in from 40 points ago. So I'm not worried if we pull back. I'm just chilling. And even if NFP were up here, that'll likely just be used. It'll be used as a catalyst, and markets will just move in my favor. So now that we're positioned in this session, we can now let this run. Is that now I feel more comfortable on letting gold run down to here, given that we've broken past this level that we were talking about, being the range low in this case, where price came down to here, retraced a bit higher, double top, now came down below this range low. Now, even if over the course of the day, we push down here and start pushing up, guess what? And we come up into here in Asian, guess what? We're most likely going to fade this, retest, and then continue towards a downside, and then fill out this intraday range back to this low. Once we break this, then you know the next logical area to go is right back down here. And now guess what? Now that bearish trend that we were talking about seems much more easy to understand for you guys, right? Rather than when you see these gold pumps happening. Now you see a draw. Now you're like, oh yeah, I can actually see that playing out. Well, guess what? It's played out every time since the start of the war. So what changes it playing out now, right? It's just having that conviction, not being phased out by what's going on or any of these optimistic headlines that are bringing inflows into gold based off of talks about ceasefire. It's all talks. When's the last time you saw a war get finished within 3 months of it being started? It doesn't happen. Like, think about it. Think about it. World War II went on for 4 or 5, like a decade, basically. The Afghanistan war went on for about 2 decades. US, Iraq in early 2000 wasn't something that lasted 3 months. They were there for years. So plus you have all these troops stationed there. You think this is something that ends on a weekend? Of course not. Sir. This ends when they decide and end, and it's not going to end based off of just chit chat and chatter. It's the same thing as oil. When we open up oil and we look at oil futures, look how high oil is sitting. Oil is still sitting at $92 a barrel.
Wild.
And exactly how we were mentioning on Monday, Kevin, is when we got that escalation headlines on Monday, right? Is that if oil's structures starts to shift now, and we talked about the fact that, hey, these escalations are likely to happen from lows, right? They're going to happen from lows because the price of oil is the globe depends on the price of oil. So now these escalations happen from lows. Guess what starts happening now? Structure starts to shift, whether it's from here or whether it's from here. Now you see structure shifting. And guess what? Now oil starts heading back towards 100, just like how structure shifted here after we had escalations from these lows, and all of these downside moves, all they are just de-escalation plays from the higher bands of $100 a barrel, because that's where we see the markets feel stressed. The world feels stressed about oil prices being high, and then they do de-escalations to bring the price of oil back down. And then as soon as we're back down here, guess what happens? More escalations. It's clockwork. This is how it works. This is how the markets move, and this is how we just stay on the right side of it and making sure we take it. Wow, come on, man. Come on. This is just beauty.
Yo, did you code the market?
No, man. I just coded a platform which really helps me understand the market.
There we go. There we go. Yes, sir. Guys, give it up for Nalab, man. Nalab G today.
Give it up for Kevin. Give it up for the whole team. You know, like we're all doing our best in this.
Yes, sir. Yes, sir. Gonna give you guys the best and then some.
Yeah. Exactly. All right, Kevin, I gotta hop off, but thank you so much, guys. Let's continue this tomorrow.
Yes, sir. Absolutely. Nalab, you're gonna be back here tomorrow?
Yeah.
Bro, let's get it. Guys, run that like button up if you haven't already. Nalab, thank you for being here. Don't forget to not leave the studio for the stream to record. Guys, have a great rest of your day. Hope you guys took some nice gold shorts with us today, or even some NASDAQ and ES longs. Again, another day with the right bias because we're using our fundamentals. Yeah. All right, everybody. Have a great day. Trade carefully, and we'll see you tomorrow.